far, while parts of them are correct, I would say that at least 30 or 40% of it has been hosed up, and I can't hold you to the 90% requirement. So I need to figure out what I'm going to do so that you will be challenged by the quiz, but that you'll all pass it with 90% or above, okay? With maybe only a few exceptions, because normally almost everybody struggles but passes it, okay? And that's what I want you guys to do. Hello?
Are you finished with the subject? I have a question.
I guess, go ahead.
Yeah, I have two problems. One of them is that on quiz one, I didn't do good, but fortunately, it corrected and gave me the answers. And then I went back again and I tried to, correct my mistakes and submit it again, but it's not taking it for some reason.
I'm not sure that part of the challenge that we have had with this is that the program we were using to put the quiz together, this was the first time we used it, and there have been some challenges with that. But having said that, and I should probably make this clear, you should not be able to go back and change your answer. I mean, like any other test you've ever taken, your answer is the answer, right? And if you got it right, you get credit for it, and if you didn't, you you don't, right? So you can't go back and change it. So my bottom line is, I am wanting to, my overwhelming intent with giving this training is to train you in methods, techniques, tools that business team has developed over the last 40 years and used successfully in something like 7,000 successful transactions. I want you guys to learn that and then be able to use it. All right, that's my objective. In addition to that, I need to have a tool so that I can test your understanding so that I'm relatively certain that you absorb the training, okay? And what I'm telling you right now is the quizzes, for a number of reasons, have not been as effective as I would like that tool to be. So I'm trying to figure out what else to do. Okay.
I have another problem that maybe somebody could help me. All the important emails that comes in my inbox, I mark it as keep.
Okay.
But I've been Googling, trying to figure out, looking at the pages that I have kept or the emails that I have kept, I cannot find that button on my G Suite. Does anybody know what side and what does it look like when I want to recover? Like I have marked maybe 5 emails to keep, but I can't go back to them. I know I've kept them. It has told me that, keep. Okay. Now keep. Now I want to go back to them. Like this student has it.
And you access your business team email through Google Gmail,
Correct. But whatever I have kept, I cannot go back and access to them. I know I've kept them. It has verified that it's been kept.
Yeah.
But I can't go back and see what I have kept. Does anybody know where is that button to look at whatever?
Anybody know?
Baha, we could talk offline and we could figure it out together. But one thing that you may want to do is create a new folder. Maybe label it as like important emails, and then that way moving forward, you could have that one folder specifically for those emails that you want to go back to.
Yeah, but I have to recover them first.
Yeah, as far as with the keep, I don't think I've ever used that option, to be honest. Has anyone else used it?
Why don't we do this? Why don't we, Baha, why don't you later on coordinate with Charlene?
Okay.
And here's one other thing, Charlene. Is Ian on this call right now?
Yes, he is.
Is he? Ian's on the call?
No,
Ian now.
All right.
Hey, Jeff.
Hang on just a second, Lauren. You know how your student workbook, for those of you who understood the significance of it, there are a number of blank lines and you spend a fair amount of time filling stuff in. There exists a copy where you don't have to fill in, and I am going to disobey Ian's orders and ask Charlene to get the filled in version of the student handbook out to you, which she will do. Okay. Lauren, what's your question?
Well, I understand that this training is part of the, I guess, the DRE requirement for ongoing education. And I just want to ask about the 90% grading policy, because my understanding with the DRE, like, you know, with their testing, it's a pass, no pass, you know, you have to make 70%. With my experience with the quizzes so far, there's been a lot of the content in the questions that weren't in material that you went over. And I think it's kind of a steep requirement to get 90% if the material wasn't really covered and you're being quizzed on it.
I think the challenge that you are having is more with me than the 90% requirement. This training is not, this is Ian's training, and it is for him to fulfill his responsibilities as the manager of our organization. This, you don't get credit, DRE, continuing education credit, for this training. Okay. The standard for the 90, for the 25 years that I've been part of business team has been 90%. And I mean, if I were your business broker, would you even be satisfied with me missing 10% of things? No. So it's 90%, but we will get everybody here there. I want everybody really to understand 100% of this stuff, but we'll get there. Now, pursuant to that end, I'm going to take a few minutes and go through the training exam for the questions that have been asked on the quiz and tell you the answers, basically. Okay?
Jeff, I'm sorry, you said that this training goes as a credit towards DRE?
It does not.
It does not.
Okay. So for right now, let's all forget about the mechanics of the exam and focus on getting everybody to 90% or higher understanding of the material, which is the key part of it. Okay. Okay. So there was a question asked on the quiz number 2. How many listings do you need by the 6th month? The answer, by the way, is 21, but that's old news. Okay, that's no longer in effect. So that's one of the ones I need to take out. Okay, a question that was on the first exam, which the first quiz, which, as you recall, has to do with recasting the income statement and estimating the most probable selling price. The question is, the seller's tax return shows $20,000 per month, but he shows you his daily log, which totals $28,000 per month. What number do you put on the business fact sheet?
20,000.
20,000, that's correct. And the reason for that is that when we present financial information, it is based on the federal income tax returns that have been filed on that business. So he can have all kinds of, he or she can have all kinds of cash register tickets or profit and loss statements. We work off of what's on the tax returns. Okay, there's another question in quiz 2 that asks, how many listing appointments do you need per week? The answer would be 5. However, that material was not actually covered in this version of the training. So I'm not going to count that one. There was another question on quiz number 2. To meet your listing goals, how many completed calls do you need to make per day? We didn't specifically cover that, but would someone like to hazard a guess as to what the answer is?
150. No, I'm joking.
No, it's 100. I have the new
25.
associate set up. It says
Yes.
100.
It says 100 in that. Yes, that's right. It says different things in a couple different places. I would, that was not specifically covered in the training. And so I had it been, I would have accepted either 50 or 100, but we've been talking more about making our own plans, right? And I know that with most of you that I work with directly, we have the folks that I work directly, I have been working with you to make your own personal plan. So that's for you guys, that's the answer. Okay, the next question, also from quiz 2, lists 2 time management techniques essential to reaching your prospecting goals. Can anyone tell me what those two of the techniques are? There's actually 4 or 5 that are listed in the
What was the question again? Sorry.
list 2 time management techniques which are essential in reaching your prospecting goals. The answer is number 1, create a plan. Okay. And number 2, block out time on your calendar for your prospecting or marketing activities. If you don't have a plan, you're winging it, right?
Mm-hmm.
And winging it generally doesn't work as well as working to a plan. And then it has been proved in study after study that, you know, in time management, what are you trying to do? What's the essential thing you're trying to do? You are trying to manage yourself so that the events that occur in the future are those events you believe will help you accomplish what's important to you, right? So if I set an appointment for myself at 9 o'clock to do an hour of telemarketing, I am far more likely to do it than if I don't, because if I don't, I may well spend that hour reading a book about Winston Churchill or something like that, which might be good for my soul or something, but isn't going to help me sell businesses. So have a plan, mark time on your calendar. Okay. Okay. Now here is an easier one from the 3rd exam. What is the time period of our representation agreement? Somebody has a guess. How long is our 12 months with an automatic extension for another 12 months? Exactly. What is our commission percentage?
12%.
12%. What is our minimum fee? Not Salika.
15,000.
15,000, that's right. What is the critical environment, what is the critical requirement of an environment in a listing presentation?
No interruptions.
No interruptions, that is correct. Who should be at the listing presentation?
All decision makers.
All decision makers, that's right, Roy. What is the first step in handling an objection?
Acknowledging it.
That's correct, usually by paraphrasing it, okay? Now, today we are going to be talking, on the exam, as we go through this, we'll be talking about some objection handling techniques. And I want to does an objection handling technique always work?
No,
No, yeah, I can vouch from personal experience, it doesn't always work. Years ago, there was a sales trainer by the name of Steve Schiffman. He wrote a number of books, primarily about prospecting, actually, but also about sales in general. And one of his characteristics was he was also a baseball fan. And I kind of like baseball too. And a point that he made is that if you think about, professional baseball, at the end of the season, every single team in the league will have lost probably a third of their games, right? I mean, every baseball team loses on a regular basis. And every single team will have won a third of their games, right? So the bottom of the league guys will have won at least 1/3 of their games. And the national champions will have lost a third of their games. The difference between the guys at the bottom and the champions are that middle third. The champions won more of those middle third games, right? I don't mean chronologically, I'm just saying in terms of who won and who lost. And all of these techniques that we're teaching are helping you to win more games in that critical third. Does that make sense? To win more often than you don't win. Okay. Okay. Another question that we got on the second quiz was, how do you handle the following objections? The seller only wants to list for 3 months. How do you handle that?
Question again? I'm sorry, what was it? Can you repeat?
The seller says to you, or the potential seller says, I want to list my business for sale, but I only want to list for 3 months. How do you handle that objection?
Most sales take 9 to 12 months. So you need a 9 to 12 month listing at least.
You show him some evidence such as a timeline, which is in the presentation book. You can show him comps, if you prepared some comps to bring with you, but also the, oh, gee, I can't, there are other things in
the transaction schedule.
Yes.
Yeah. The fact of the matter is, it takes a while to sell a business. On average, it takes business team about 8.5 months. With the marketing packages, we hope to reduce that time a little bit, or even maybe even significantly. But there's still what I tell the potential seller would be basically what these gentlemen have been saying. And look, it takes us a while to package your business so that we have all the answers we need to make a good impression right from the start of when we start marketing it. Okay? And we're going to be talking about packaging today, and you'll see that there is a lot involved in that. Then on the back end, from the time we have a sign both ways offer, we've got probably a couple months to actually get the transaction closed in a lot of cases. So that's 3 months right there. And then we need some time in the middle to actually find the right buyer for your listing, Ms. Seller. So yeah, you guys are all on the right track. You just can't get it done. And on a personal note, we only get paid once the transaction closes. It is we do all of our work, though, or much of our work we do right up front with the packaging and all that sort of thing. So don't take a listing unless you have the time you realistically need to get the listing sold and get paid for it. Okay, how about if the seller is already working with a buyer. So the seller says, I'd like to list, but I already have a potential buyer for my business. How do we handle that?
Give them an exclusion for 30 days.
Exactly so. And there is specific language in the Part 1 manual that you have. There's a page that says additions to the representation agreement. Okay. Okay, here's another objection that you get, particularly when you are telemarketing. It could be, well, one way that it frequently goes is, well, I'd be happy to sell my business to the right buyer. Go ahead and bring me a buyer and I'll sign an agreement. How would you handle that? I'll sign a listing agreement. How would you handle that objection? Meryl, you're muted. Anybody? Okay. If a potential seller says, I don't want to sign a listing agreement until you bring me a buyer, what we recommend you do is you say, great, what I'd like to do is meet with you so I can find out more about your business and determine if it would be of interest to our buyer. Now, in actual, that's what's in the manual to do. Here's my experience. If a business owner says, sure, everything I've got is for sale, bring me a buyer and I will, I'll sign a listing agreement then. He is probably only interested if the price that this fellow offers without knowing anything about the business is about 3 times what the business is worth. So I try what, sure, let me meet with you, but then I treat this frequently as he said, no, I'm not interested. It's like saying, I have a mechanical pencil here. It's a rather nice mechanical pencil. I probably paid $10 for it. Meryl, I'd be happy to sell you this pen for $30. Okay. You're not going to pay $30 because you can buy it for 10, but it's a very nice mechanical pencil. Okay. What do you do if you find out that a business is listed with another broker?
Find out when the listing expires, who's the name of the broker, and is he happy with the way things are going?
Perfect. Yes, that's exactly right. Because if it is listed, we can't interfere with that, but we can be standing there with a smile on our face the day the listing expires. So exactly right. Who's it listed with? When does it expire? And who? I'm sorry. How is it going?
Hey Jeff, this is Roy in Sacramento. Would you ever attempt to list it and date it a day after that expired listing occurred, knowing that this individual was doing a bad job?
I would not personally do that. No, I just.
You need to see what the listing agreement with the other broker says. Maybe there's an automatic renewal clause. Who knows?
Correct. Okay. Yeah. Yeah. Good answer. Thank you.
Okay. Let's see. After listing the business, how often should you be in touch with the seller?
Weekly. Let them know what's going on, what the game plan is, maybe traffic, get a feel for what's going on in the business. Don't let them, don't have them think that you're just doing nothing about it.
Exactly. You're once a week, at least once a week is the correct answer. Um, Okay, it is okay to put negotiable for the financing terms. And I'm talking about in the representation agreement here.
Never.
Yeah, never. Right. In order to have a valid listing, you must list a price. Okay. Similarly, if the seller is willing to offer, if the seller is willing to offer seller financing, you must specify what they are actually willing to offer. Sometimes when I look at the business fact sheet, which is where we actually cover the seller financing, people say to be determined, or it depends on the buyer. Yeah, of course it does, but for listing purposes, we have to communicate it exactly. So if the seller's answer is, well, it depends on the buyer, how much seller financing are they prepared to offer? None. Okay. Okay, here's a very poorly worded question. Seller wants $100,000 for his business and also wants a buyer to assume an equipment lease for $100,000. What is the listing price of the business?
100,000.
Well, the correct, like I said, it's a poorly worded question. The correct answer is 200,000. And what I would say is, if I were rewording the question, you have convinced the seller to take to list his business at the most probable selling price of $200,000. The seller has an equipment lease for $100,000 that he would like the buyer to assume. How much of a down payment does the buyer need to come up with in cash? $100,000, because that $1,000 equipment lease or note that is being assumed becomes part of the purchase price, part of how he's paying for the business.
And Jeff, would that question mislead us with regards to other additional obligations that a buyer might have to assume in buying a business? That was real clear. You were trying to make a specific point there, but there might be many other obligations, and I don't know whether or not, once you come up with an asking price, you would add those to your asking price.
Correct. Yes, and as we will find out today when we're actually talking about packaging a listing, that is a key purpose of packaging, is to find out all the details about the business so that we can properly present the opportunity to buyers.
Jeff, on that example, 100,000, say for the price of the business, 100,000 assumption of the lease. If you put 200,000 as a price for the business, in the covering the equipment lease, why would you need $100,000 down? I mean, isn't the buyer going to go get a loan, SBA loan or whatever bank loan to cover that carrying of the lease, equipment lease? So I'm a little bit confused about that math.
Okay, I'm going to show you that real quick. I'm going to forms. And I'm going to offer an agreement to buy. This is the offer form we use most often. And if you look at paragraph 1 here, it says that the purchase price, the total purchase price shall be $100,000. I'm sorry. Well, this is where you put the total purchase price. In the question I just gave you, the total purchase price would be $200,000.
Okay.
Lines A, B, and C, which total at line D, are the total down payment. Okay. So in this example, the total down payment would be $100,000. Okay.
What
In addition to the down payment, typically, buyers have 3 different ways that they can finance the rest of the transaction. One, they can get a new loan by an institutional lender. This means an SBA loan, okay? So like you say, they could get possibly an SBA loan to cover the remaining $100,000 if they wanted to finance half of it. There's assumption of note balance payable, and that's specifically what we're talking about in that poorly worded question. The seller wants the buyer to assume that $100,000 note balance. And we have in our listing documents, we can specify that the seller wants the buyer to assume that balance. The third way, and so that is part of the financing. So the seller essentially, by doing that, is offering some financing. Hey, you can buy my $200,000 business, and you only have to have $100,000 in cash to do it. Then the third way that we can finance that, you can see my screen, right? You can see the offer and agreement to buy.
I don't see your sheet.
Staring at my face all this time. Okay. In this example, there's 200,000. Okay. Here's total down payment of 100,000. And here is assumption of note payment of 100,000. For a total price of 200,000. The question was poorly worded. I don't like that question, but that's what the question was. Okay. So there are 3 ways that a buyer can finance part of the purchase price of a business. One is a loan from a bank by basically an SBA lender. One is assumption of an existing note. And then the third is a promissory note to the seller. And doing something like this makes the business more attractive because there are more people who have $100,000 to buy a business with than there are people who have 200,000. Not every business can qualify for an SBA loan, and not every seller is willing to offer a promissory note or accept a promissory note.
So are you saying that you will not be able to, if I'm the buyer for this business and I only want to put 30% down of the total purchase, that's $60,000. I will not be able to find the bank that will finance $140,000 and forget the seller financing. So SBA, so I guess I don't understand how SBA finances business that has this kind of equipment. I mean, most businesses have equipment. So what does SBA finance and what do they not finance? That's basically what I would like to know.
Okay. The SBA in general loans money based on the seller's, the historical seller's discretionary earnings of the business. The SBA wants to make sure that the business is generating enough money each month to service the debt on that SBA loan. And there are, of the old hands, well, I won't ask it that way. You cannot always count on getting an SBA loan. You can't, because they are looking both at the earnings of the business, and they are also looking at the buyer. It's not like a house. A house, most banks will do backward somersaults to loan you money on a house because a house is the classic tangible investment. It's a real thing. You can touch it, you can feel it, and the value of it doesn't go away. If the homeowner has proper insurance, you can even burn the place to the ground and it's still worth as much money.
I
Right?
understand that. I'm sorry, Jeff.
No, go ahead.
My question is, assuming that we price this correctly, based on the cash flow, then if buyer puts down, even if it's let's just say a little over 30%, $80,000, that's $120,000 to be financed by, and I'm leaving the seller financing out. So are you saying the seller, SBA will not finance business purchase of, in the amount of $120,000, that the cash flow clearly can handle the monthly payment of $120,000 SBA loan? That's my question. Why does it have to be 100,000, 100,000?
Here specifically is what this question, this poorly worded question is saying. Okay, here's the lesson from it. You need to find out, number one, if there are any outstanding liens on the business, like that equipment lease. Okay.
Mhm.
And you need to have a plan to resolve those. Either the seller is going to need to pay those off out of the proceeds of the sale, or the buyer can assume that loan. And generally speaking, the business is easier to sell if, for part of the purchase price, the buyer can assume the responsibility for an existing loan, an existing debt. That's what we're trying to get to.
Okay.
Yeah, that's what we're trying to get to.
I
And
guess.
just conceptually, Jeff, I think of a lease as renting equipment, basically paying rent, maybe with a residual, maybe not. And so why would we handle this differently than the rent for the premises or some other rent?
Good question. The answer is some leases are simply leases, like you're describing them there. Many equipment leases, you end up owning the piece of equipment at the end of it. And another phrase for this, again, I hate the way this question is worded. But another phrase for that, or it should really be considered as a loan rather than a lease. Does that make sense?
Well, I should think of this more like I would think of a mortgage and treat it that. Now, I've already deducted the monthly expense, and I came up to the SDE when I arrived at $100,000 for the value of the business.
All right. You know what? We will cover this in other classes. I don't want to spend too much time on it.
Yep.
You guys are making good points, but the bottom line is, if the buyer can assume an existing loan that the business has, that will probably make it somewhat easier to get that business sold, because the buyer will have to come up with less cash money to acquire the business. In general, not always.
I see. So we want to highlight that, perhaps call it out and present it in that fashion.
Right. Okay. Real quick, what are 2 steps you can take to improve your chances of getting the listing prior to the listing appointment? One is to be on time. That does not help your credibility, your trustworthiness if you're late. Number 2, do some research, not too much, but some research on the business, the seller, and the industry. Number 3, run comparable sales so you have some idea of the pricing of businesses like this. Okay, here's a question. What are two likely results of excluding inventory, debt assumption, or accounts receivable from your listing? In other words, not including inventory or accounts receivable in the purchase price and not trying to finance it in the debt assumption, not using debt assumption as a financing means. What are two likely results of that?
Insufficient working capital for the buyer.
That would be one of them. Yes.
You're gonna have a lower purchase price as a result.
You're going to have a lower purchase price, exactly. And what happens to your commission when there is a lower purchase price?
Lower commission.
Lower commission, exactly so.
Well,
So-
now we're running afoul of our fiduciary responsibilities.
Say that again?
Well, if we make that decision, we're running afoul of our fiduciary responsibility, which is to put the client first. You
If
just
we
put
make
us
a
first.
Decision to exclude those items?
Yeah, exactly.
Yeah, but accounts
For-
receivable
for-
and such stuff are assets that
if-
should be.
If you're doing it for that reason, if you're doing it by putting us first, then you're violating our fiduciary responsibilities.
Well,
Are we not?
Well, that is correct. However,
Yeah. Mhm.
in general, it is a win-win for all parties. Including the inventory and accounts receivable in the purchase price benefits the buyer. Including debt assumption benefits both the buyer and the seller because it makes it easier for the sale to occur. And it benefits us because we get commissioned on a higher price. And
Well,
and
I
let me
agree
ask a second follow-on question to this. What effect does it have on a buyer if accounts receivable are not included in the purchase?
Price goes up.
And the buyer needs more working capital because accounts receivable is capital that flows in. So if accounts receivable are not included in the purchase price, the buyer is going to need more working capital to keep the business going.
Yeah, but wouldn't the price go down to respond to Mike's comment?
Not for the buyer.
Price goes up. Yep.
Well, yeah, exactly. So not including it, the price goes down.
The price goes down, but correspondingly, the buyer will have to
Have more working
have
capital.
working capital.
Yeah, yeah.
Whereas
Okay.
if it's included and we do get an SBA loan, frequently.
Yeah. SBA is not going to like that. I understand.
Yeah. Okay. If at close of escrow, the inventory is less than in the listing, will the price be adjusted?
Yes.
Yes. Generally speaking, both listings and offers are written along the lines of the price shall be $400,000, which will include $100,000 of inventory. Right before close of escrow, buyer and seller count the inventory and agree on a value of the inventory. And let's say that it's $80,000 rather than $100,000 in the agreement. The price would then drop by $20,000 to $380,000 rather than $400,000. Conversely, if there's $120,000 of inventory, the price would go up to $420,000. Is it all right? Well, if the owner asks you not to contact the landlord until you have a buyer, is that okay? No, it is not okay. A very frequent reason that deals fall apart is because of the lease and the landlord. And generally in project management, if we know a project is going to fall apart, do we want to find out about it up front or when we're 6 months into the project? We want to find out about it up front. So we have to talk to the landlord upfront so that we can identify and resolve any issues, or say, you know what, Mr. Seller, your landlord will not cooperate with this thing. I don't know that you're going to be able to sell your business. That's bad news, but bad news does not get better with age.
This is especially important in retail. You should definitely talk to a landlord early on. When it's business to business in a business park, it's less impactful.
Yes.
They can possibly move, but retail, it's front and center.
Yep. Another way of saying that is if the present location of the business is critical to the operation of the business, like retail or a restaurant or anything like that, it is absolutely critical. It is less so if it is the sort of thing that, you know, they've got a standard space in a light industrial park and there is lots of other light industrial space available, then it's less critical. But still, it is absolutely far and away best to coordinate with the landlord right up front.
So Jeff, once you have if you have the listing agreement, then do you have the absolute authority to contact the landlord without the seller's permission?
Contractually, yes, but you still would probably want to talk to the seller.
You don't want to
if he's
jeopardize.
denying it, that was why I got the wrong answer on that question, frankly.
Yeah.
Yeah, if you need to maintain good relations with the seller and not alienate him. And for some reasons, whether valid or invalid, the seller is scared to have the agent contact the landlord until there's an offer.
I can understand his thinking, and that's why I asked the question, Joe.
Yeah. One other aspect to be considered in that, let's say that I listed Michael's business and then tried to talk to Roy, his landlord. Roy would actually be correct to say, Jeff, I don't know who you are. I'm not going to tell you anything about Michael, the business arrangement between Michael and I, until I've heard from Michael. So very frequently, in order for the landlord to be willing to talk to you, the seller may need to give him a heads up and say, hey, please talk to Jeff or whoever.
Yes. So it's a little bit nuanced.
Yes, it is a little bit nuanced, but the general rule is talk to the landlord up front.
When we present a new listing in our staff meetings and you haven't talked with the landlord and that comes out, the first person to pounce on you will be Ian.
Yeah.
Yes, absolutely so. Okay, I have 10 minutes after the hour. Let's take a break until 20 minutes after the hour, and then we'll move on into today's subject. Okay?
Jeff, I just have a request.
Yes, sir.
Every other training has gone past the set time, and I have a scheduled call at 1 o'clock. Can we plan on ending promptly at 1 or?
Yes, I believe so.
Thank
yes,
you.
we will.
Jeff, can I ask you a couple of questions during the break?
Sure.
Are we on break now?
We're on break.
Okay.
Although I will be going away for a few minutes during break, so.
Okay, I'll ask you quick. I understand business team's position that you just calculate numbers based on the tax returns.
Yes.
That being so, I mean, I understand why I'd want to see the financials. Why do we secure the financials if we're going to base numbers just on the tax returns?
By financials, you mean their profit and loss statement?
Yes,
and,
the business financials, the books, you know.
Yeah. I've mentioned before that there are a number of things about our forms and things like that that I'm not crazy about. The financials that I believe are important, well, generally speaking, for most of the businesses we sell, the financials that I believe are important are the last 3 years federal tax returns, and then an internally prepared profit and loss statement that covers the period since the last federal tax return to the end of the most recent month. So generally speaking, if I can, I try not to use any other P&L other than the one since the last tax return. And I generally try to use for that a trailing 12-month P&L, so I'm still representing a 12 months of information, since that's how the tax returns are. With balance sheets, particularly for stock purchases, which, well, I take that back. We don't cover that in this class. We cover it in another one. Particularly for stock purchases, a current balance sheet is very important. You need to adjust it. And that I use fairly frequently. But in terms of profit and loss statements, I try to limit it just to since the last tax return.
Yeah, but the gist of the question was that the reason we're using the tax returns is that we believe those are really true figures. And in the example, the guy's underreporting his income basically $100,000 a year.
Mm-hmm.
So if his financials, he does that the whole time, why would you be using P&L where you know he's not reporting all the income?
Why would you be using a tax return?
No, I understand why you want to use the tax return. And
Right.
But then you say, well, I'm going to use the P&L to get the last trailing 12 months, which you know the guy's he's not going to use those numbers on his tax return.
Because that's all there is, and that's what the banks will use as well. There is no
Okay.
tax return.
So that, well, I'm kind of befuddled about all that. I understand what you're saying, but it's inconsistent. And I guess the other thing is, if I'm the seller, okay, I'm a tax cheat, but this business in reality is generating $100,000 more a year. So if you came to me and said, look,
We can't.
you may actually be getting
But there is-
$100,000. Excuse me. You may be getting $100,000 extra, but we're not going to give you credit for it when we calculate our SDE. I would say fine and dandy, come up with whatever price you come up with. But the only figure that I'm agreeing to offer my business is going to be based on what the real numbers are. And then, you know, that's going to be between me and the buyer on what he wants to accept.
I have a good answer for you, John.
All right.
Having sat in for him more than once, Ian is almost always fighting at least one lawsuit at any given moment. I'm sure he is right this second, if not multiple ones. And most of them, I think, are properly characterized as frivolous, but they still cost money to respond to them. And then sometimes we have had judgments against us other than just the cost of defending ourselves. And it's his experience based on 40 years that the best way to protect himself and our organization from lawsuits, from the worst consequences of lawsuits, is to base the financials we use on the federal tax returns.
Okay, I've got your position. I have one other question.
Yes, sir.
I'm unsure, because I've gotten several different answers on a buyer's inquiry and just the whole process. Well, according to the NDA, you can give them the tax returns right out of the box, but understand people don't give them the tax returns till the offer's made or they're getting ready to make an offer or something like that. What is your line of demarcation when you actually give a potential buyer the copies of the tax return?
Business team's policy is that the actual tax returns are shared during due diligence or verification of business performance. In other words, after an offer has been made that has been accepted by the seller, and the buyer is now removing contingencies. That's when we would share the actual tax returns. Now, as soon as we have sufficiently qualified the seller to, the buyer to share confidential information, like when we are presenting the business before an offer has been made, we do present the recast income statement, which, as we have been discussing, the second page of it, the income and expense input page, is exactly the information that's on the tax return. And it would not be inappropriate to, while he is still considering writing up an offer, to show him a copy of the tax returns, which he did, but not let him keep them, but show him that, look, these numbers are exactly the same. They match up 1 to 1. But then after the offer has been made is when we normally made an acceptance of the tax returns.
Right. I mean, I just found it, I don't know, odd, best word I can come up with, why someone, a buyer would actually make an offer without actually seeing the tax returns and verifying everything on it. I mean, he's making a real offer to give real money, and he's taking some number somebody put on a sheet. It just, I've never encountered that. That's why I wanted to get the understanding here.
Yeah,
So I basically, I would represent to someone, well, here is our recast stuff, and we have taken that right off the tax returns. And if you ever make an offer, we'll let you actually see, or we'll give you a real copy of the tax returns. And that's what you're telling me.
That is correct.
Okay.
Give access, extended access to a real copy of the tax returns. Yes.
Okay. Thank you.
Um,
One thing I wanted to point out.
Would also get a transcript of the tax returns from the IRS to validate what the seller's presenting matches what's been submitted.
You actually run that down from the IRS and then give it to them instead of the tax returns. Is that what you're saying?
No, you give them both.
Oh, well, I don't know why I go to all that trouble. Jeff, just on the wording of the question that you had there, where it was $20,000 a month on the tax return.
Yes.
That was the actual language.
Yes.
There is no monthly figure on a tax return. They're done on an annual basis.
I understand that, but
Okay,
that
befuddled me.
Yeah.
But
yeah.
Okay.
Most of these questions are I didn't write these questions, and most of them I think could be reworded better. But the idea is that we use the numbers we use are based on what's on the tax return.
I understand.
Yeah.
So Jeff, real quick, would the question that John had proposed, wouldn't everything be based upon confirming and say an offer submitted based upon subject to?
Well, that is kind of actually the general idea. I would say that 95% of our transactions are what could be called business brokerage transactions, and 5% are what could be called mergers and acquisitions. Okay. And generally the two are the same. There are some differences. The one aspect of a mergers and acquisitions is that frequently a merger and acquisition, frequently the offer to purchase is not made until after due diligence is completed. And that might be part of John's thinking. I'm not sure. But I kind of view it and have frequently presented it to the seller, particularly in a business brokerage type transaction, I'm sorry, presented it to the buyer. You know, Mr. Buyer, what this offer basically does is it gives you the right to conduct due diligence and get, so we're on at the same time protecting the seller's need for confidentiality and your need to understand the business. This offer gets you the opportunity to do due diligence and decide if you really do in fact want to go forward.
Right, that's what I was thinking. I just wanted to make sure I understood it correctly as well. Thank you.
If you're not comfortable going forward, Mr. Buyer, we can get you back. You can just not remove that contingency. Okay, I have to excuse myself for just a moment. I need to check something. I'll be right back.
So whoever's still on the line, did Jeff cover the rest of the quiz 1 before on the last training or anything that I missed?
No, he didn't go over the questions and answers.
On the first quiz?
He did not.
Okay, I would like to, I hope he does that. I guess we can ask him. Thank you.
Okay, shall we go ahead and start the actual training now? Okay, it looks like we have most of our folks here, so let's get started. Okay, please turn to page 148 of your student manual. And let's talk about why we package a business. There is a test question about this, so pay attention. There are 4 main reasons that we package a business. The first reason is to provide accurate, easy to understand information about the business to our associates so they can effectively present and sell the business to their buyers. Number 2, to uncover and eliminate surprises that may torpedo a transaction, wasting time and destroying credibility. Number 3 is to impress buyers, and number 4 is to impress sellers. Questions or comments?
What was
I
the
have to say- I'm sorry, go ahead.
what was the first one of the 4? Oh, here it is. The main purpose is to provide. Okay, thank you.
You bet. And Charlene, I asked, you will send out the complete version of the workbook, right?
I'm sorry, say that again, Jeff.
I would like you to send the complete version. In other words, the one that they don't have to write everything in. Please send that to everyone. Okay.
Okay, sounds good. We'll do.
Okay. I want to show you what a what a complete listing package looks like. So we will go to Team Magic. Let's take a look at Insight Glass and see how that looks. Okay, this is a completely packaged listing. Okay, this is what the end result of your packaging effort looks like. Okay, I'm going to start with the business profile. There are two versions of business profile. There is the blind profile, which does not have the business name on it or any other identifying information. There is the business profile that shows the business name. I use the blind profile exclusively, okay? And we can give a blind profile to anyone because there is not any confidential information on it. It essentially is a one-page ad. We have to find this photograph. We have to find a photograph for the business. We don't want a photograph of the front of the business with the name on the sign because that blows confidentiality. Very frequently, we use kind of stock photos from the internet that represent what the business is as opposed to a picture of the business itself, at least for the blind profile purpose. We write a lead line, which is what this is right here. We write a blurb, and we're going to be talking about blurbs more in the either at the tail end of this session or the next session. But this is a statement designed to generate buyer interest in this business to get them to contact us. It has the financial history of the business over the last 3 years plus whatever there is this year. Just as a side note, this is tied to uploading the recast income statement that we have talked about before. We give additional information about the number of employees, the number of owners, the licenses that are required, their hours of operation, their asking price, down payment. Now, this particular one, they have not specified a price on. They have indicated the amount of inventory, accounts receivable, et cetera, that will be included in the selling price. Some information about the rent, the fact that it's a C Corp reason for sale, okay? A second document, so business profile or blind profile is for public consumption. The listing summary, which is found right here, is for broker use only. And this is so one of our colleagues can effectively present this business to a potential buyer. It has much the same information, but it may have other information too. Like in the comments, let's say that there were some particular qualifications that the landlord wanted for the buyer, you know, a certain net worth or something like that. You could comment on those. Basically, these comments are things you would say to another broker so they can understand how best to get this this listing sold. Under showing instructions, usually it says something like call the agent to set up an appointment, okay? Something that I strongly suggest under showing instructions is that, you know, sometimes businesses or business owners have specific times that they are willing to let us show the business. Like maybe we can only show it after business hours and on the weekend or something like that. I think it's appropriate to put that in the showing instructions. All right. But that is a second document that comes out of Team Magic. We attach a bunch of documents. We attach a business, well, here's the blind profile photo that we uploaded, and there are certain size requirements for that photo for it to work. We upload a business fact sheet, which looks like this. Now, this particular one, they, Michael, this is yours, right?
Yes. Yes.
Good. So in this, you referred to the CBR for a lot of it. And that's okay.
For the employees, they had like 30 employees.
Sure.
So, and it's all listed in the CBR.
There you go. Good. I want to emphasize something about the business fact sheet. And this too is a test question. Okay. So listen and pay attention to this. One of the key purposes of a business fact sheet is to get the seller's signature on the key information that we are going to be presenting to prospective buyers. So we want the seller to sign this basically to verify some of the key information, okay? A second thing to point out about this is that when you have it all, you enter, in addition to uploading documents, you'll be entering a lot of information into Team Magic itself. Like, remember I mentioned comments and additional terms? Here they are. Remember I mentioned lead line? Here it is. Remember I mentioned blurb? Here it is. You see here, it says fact sheet. If you enter all the information, you can click on this and it gives you an error message. And I don't know why it does that. What it's supposed to do is it is supposed to create a properly formatted business fact sheet that you can then have the seller sign. So I don't know why it didn't work.
You have to hit save.
I'm sorry?
Do you have to hit save first before it will give you the fact sheet?
Well, I think all of this is saved because I haven't made any changes to it. But certainly if I had made a change, I guess that's the rule number one about packaging a listing. Whenever you enter information in a field, click save, okay? Because if there's a problem, you want to catch it as soon as possible.
Jeff, when you say you need to, we need to call each other to package the listing, is this the one you mean put
Right.
info in the Team Magic?
Yes, exactly so. You
Okay.
and I have one of your listings that we need to do a few more things on. Okay.
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 Jeff, after you fill in the fact sheet, then does it get automatically uploaded to this?
You have
How do you make sure that that error message doesn't come?
I don't know why it gave that error message. For years, we had to fill out the business fact sheet separately. Now there is supposedly a method to do it through here. I'll track that down. I don't know why it didn't work.
Jeff, that sheet was filled out on paper and scanned in. I don't know what you're
No, but-
talking about.
You know, what I'm talking about is if you go here to listing details and you go where it says fact sheet here, what is supposed to happen, this is a fairly recent update. If you click on that, it is Team Magic is supposed to prepare a business fact sheet for you to submit to the seller's signature.
I have never seen that used.
So if you
Okay.
fill in the
That's something new.
information here,
That is new. And the idea is that, and I'm not going to spend, other than to say what I'm about to say, I'm not going to spend any more time on the business fact sheet. But in order to produce the business fact sheet, you basically have to type in to the business fact sheet every piece of information that you also have to type into Team Magic. Right, Mike?
Yes.
Yeah.
Yes. Yeah.
And so supposedly this business fact sheet is intended to make it so you only have to type that stuff in once.
I've never used that yet. So okay.
Yeah, it is a relatively new thing. And obviously, since I'm showing it, it doesn't work. But
It's in beta. It's in beta.
It's funny too, because it came up, Ian brought it up, that very subject on our Northwest call yesterday.
Okay.
Can I interject? A couple of reasons why it may not work is that number one, you're not admin, and
yeah.
and it has and you're not Michael to get in there. But once the listing becomes active, it's on many of those functions you have to call Shauna or your office manager to be able to make a change.
Very good point. Very good point. In my own, I bet you're right, Roy. Now that I think about it, I bet you're right.
Yeah.
For my own self, as I am packaging the listing, I tend to use the business fact sheet as a note-taking device. Okay. It is actually, in my case, just about the last thing that I have the seller sign before I make the listing current. Okay. Now, something here that Michael has created is a CBR, a confidential business review. Preparation of one of these is beyond the scope of this class, but it is. It is a good example of a well-prepared CBR. We tend to use these with higher end businesses. Well, basically, we are required to prepare one of these for any business that has a price over $1 million.
So are we is this part of the part one training on how to produce a CBR?
It is not. I'm just showing this as an example of what this is, and that we do need to prepare these for businesses priced more than $1 million. I think we probably need to have a separate class on doing that. Actually, the guy I want to teach that is probably Bob and Lee Allen, because they do a great job, although others do too. Okay.
Charlene did one for Ian's new listing, Vector X, and it blows away anything that we've done before.
Who did that one?
Charlene.
Charlene did, yes.
Vector X.
Thank you, Mike.
It sets another standard. This is This is not any good compared to that. I mean, it's true. It's
So
true.
let's work that into the training. And besides Bob and Lee Allen, we can have Charlene tell us a little bit.
Yeah.
I like that idea.
More than happy to.
I would say that in addition to making it look really good, it's important to have your information correct. It's a combination of both, okay? Okay, I made a note on that. All right, agency disclosure form. We have talked about this form before. Right? This is a form required by the DRE. We have the seller sign it. We need to sign it. Aha. Someone didn't sign their agency disclosure form. And if two of you are working on this together, you need to have one of these forms signed for each of you. So if I were working on a listing with Laura, Laura would need one of these with her DRE number on it, and I'd need one with my DRE number on it.
So you're saying that one of the agents needs to sign that form?
Yes, I am.
Okay.
Yep.
Okay.
And well, not just one, but both. Only one agent can sign it at a time, but you need one of these for each agent who is involved in it. So I think you're co-brokering this with Ian, right?
Yes.
There should be one of these for you and then a second one for Ian.
Okay.
Oh, it can't be circulated via right signature to everyone to sign on one document?
Well, I think probably the right signature idea would work, but my understanding is there must be a separate agency disclosure for each agent who is participating in the transaction.
As well as the seller's signature on that separate form as well, right?
Well, okay. So in this case, there are two people who are the sellers of this business.
Yeah.
Two people can sign on two. The sellers, whether it's one person or two person, can both sign on this. But this also, what this is basically is saying is, what these two folks are saying is, Mike Hamilton disclosed information about the nature of a real estate agency to me. I acknowledge receipt of that disclosure. And then secondly, since he is, because we each individually are required to disclose information about agency. This is required. You can read all the fine print if you want, but this is required of us by the DRE. Okay.
So you have to sign this and scan it and then load it.
Yes. Yes.
But my question, Jeff, is since there's two sellers and two agents on this, so the sellers would have to sign both copies, is that correct?
You're exactly correct, Salika.
Okay.
That is exactly correct. Yep. Yep, good job. You're right. You got it exact. Okay, equipment list. What that is you need a list of the furniture, fixtures, and equipment that is going to be included in the sale. Now, in this case, they've got a lot of equipment, and what they have included as the equipment list is basically the schedule of assets and depreciation from the tax return. That is, that's fine. It should be signed by the seller and dated, because in a way, this is part of the. He's saying I'm agreeing to include this stuff in the sale. Okay, so it should have his signature and the date on it, And if you are involved in a transaction, maybe the listing has been around for a year and you finally have an offer on it and you're involved in a transaction, it's not a bad idea to prepare an updated equipment list for the seller to sign. On Team Magic, there is a form. It's called the equipment list, and it's rather simple. It's actually called the fixtures and equipment list because we can't call anything by just a regular name. As you saw here, there's a whole bunch of financial information there. That is not required. What is required is what is included in the price. So basically, you could take this column here and use the business team form to just list all of those things one by one, okay? Then you should get the seller to sign it when you are packaging the listing. And then right before close of escrow, the buyer is going to use this list to confirm that everything is there. And then the buyer is going to confirm that he's getting everything that was included in the sale, all the tangible stuff included in the sale, right? One other tip about putting this together, I found it helpful sometimes, since this is ultimately going to be used by the buyer right before close of escrow, is to organize this kind of geographically within the business, like reception area, owner's office, bay number 1, bay number 2. You see what I'm getting at? So that you can kind of get everything all within one room, within each room of the business, if that makes sense. Hope that makes sense.
Why don't we just use the form from the tax returns? Why are we copying it? And, it's like the profit and loss.
Well, let me ask you this. Have you ever seen a depreciation like this on a sole proprietorship?
No.
I never have either. There's your answer. Still need an equipment list. Okay.
Hey, Jeff, this is Roy in Sacramento. I got a question for you. I just closed something, but would we also do this again and put the price because of allocation, because escrow's asking for that, because the state of California for taxes are now asking for equipment costs? Because it seems like I'm doing the same thing over and over. I mean, would you use that same document, put the quantity, the description, and then put the price, even though we've confirmed equipment's there for both parties? Because I just went through this last couple days.
Well, is the state of California now requiring basically documentation to back up the allocation of purchase price to furniture, fixtures, and equipment?
Yeah, yeah. Because they're looking for the tax dollars to be reported, and escrow's holding it back, and doing all that other stuff.
Sorry, Jeff, I missed the point here. Do we have like a set sample form, like a format, standard format for feature equipment?
This that you're looking at right now is the business team standard format. And all you would do is all we do well. And here's to answer Roy's question. Here's where it gets tricky. Roy, when you provided that list of equipment values, did you use its acquisition value, its book value, meaning the acquisition value minus accumulated depreciation, or did you use the fair market value for that piece of equipment?
I think we used the fair market value, and it had to equal the dollar amount of the allocation that was reported. It was already negotiated.
How did you arrive at the fair market value?
I went to the buyer. I went to the seller.
Well, I would.
And if he had to come up with a price, and if he did his homework and he found that truck was $30,000 or $25,000, he reported that. He may not have reported, you know.
Well, there's going to be an issue when you get to the county property tax, personal property tax. You have the allocation of purchase price, and that has to be reported, and the county may review that and say, no, you've been reporting such and such amount, you know, on your 570-1L forms, and we may charge you back taxes. That's happened on one of my deals.
Okay. Okay.
I'm going to have to talk with Ian about how we are going to handle this. Okay.
Yeah, because there's obviously he wanted some of that on goodwill and on some of the other items. And I thought it would be a good time to present that. How do I do this, do it correctly, and use one form, including the price? So we're thinking about it ahead of time and not at the last minute.
Well, the short answer for doing allocation of purchase price, which we're actually going to cover in a greater degree in part 2, is we do not do allocations of purchase price. That is a job for an accountant.
Correct.
Okay?
Right.
We need to make sure it happens, but we don't do that. And so I suppose that we would need the accountant's input on the proper value of the equipment to be used. Up till now, business team's policy is that they don't really want you, Ian does not really want you estimating the value of equipment. He just wants you to list the equipment that's there, okay? Because determining the fair market value of a piece of equipment, there are people who are skilled at doing that. And so I guess what I'm saying is for this purpose, the main purpose of this is just to clarify what is actually going to be included and what is not going to be included in the sale.
Got it.
So it'll be outsourced to the CPA.
When we get to the allocation of purchase price part of it.
Yeah. Okay.
Let's put this in the category of, for right now, at least get the list of furniture, fixtures, and equipment, not including price. At least get that. Be prepared for developments down the road.
Okay. Thank you.
Okay. The next item are the financials. Now, one financial is the recast income statement, which is all the way down here, okay? And we've talked about how to prepare this document. I want to point out that you should get a signed copy of this from the seller. You may or may not post it on here because you're wanting to have as clean a copy as possible, but in your files, you should have a copy of this that has been signed by the seller. Okay. Sometimes you don't, well, you want to have this nice and clear, so sometimes you don't actually post the one that's been signed, but you need to have it, okay? You also need copies of the tax returns for 2017, 2018, 2019, and then we've got a year-to-date P&L ending September 30th. Let's take a look at those documents. Okay, here, here is the 2019 tax return. Here's an important thing. You see on here where it says not verified by business team. Charlene, you're online, aren't you?
Yes.
is there a technological way that we can help our people? I assume this is basically a watermark using Adobe Acrobat or something like that.
Yep.
Yeah.
Can we help people do that?
You mean right now, Jeff?
Well, I mean,
I
don't
could
mean
send.
this second, but,
I could send like a step-by-step instruction on how to do that. I could create like some sort of like a Word format. That way everyone could have it on file.
that would be perfect because everybody, all pages of all financials, whether it is the federal tax return or a profit and loss statement or a balance sheet or anything, should have not verified by business team on it. Okay. Additionally, all financials must be signed by the seller. Aha. Normally on a tax return, we have them sign it right here. Okay.
Yeah, Jeff, the accountant does everything, and he did initial certain pages. They actually have an in-house accountant, and so he did initial it. So they are initialed. On the not verified, I only learned to do that with the program in March. So the equipment list, which was done in February, wasn't. If you look now, it has been updated in the last 5 minutes. I actually have that. But I didn't know how to do it at that time.
Yes.
Now I do.
Well, this is further evidence of the fact that we all, one of the thrilling things about business brokerage is we learn new stuff every single day.
Yes.
And yeah, so here's the rule. Okay, the all financials need to be stamped, not verified by business team. Then the first page of a tax return, and I just showed you an example of where that would be, right here, should be signed by the owner. The reason we have this rule is that in years past, sellers have done nefarious things. We've ended up in court. We have presented evidence like this that has not been signed, and the sellers have had the temerity to say, "Oh, I've never seen this before. I didn't submit that tax return. I think the broker must have put this together just to inflate his commission." So we have them sign it to protect ourselves. Similarly, on an income statement, like this one here, it should be signed at the bottom.
Yeah, these aren't going to show it.
Yeah, that's okay. Well, I mean, that's between you and your team leader.
Yes.
But the policy is that you would have the seller sign at the bottom of a income statement, also called a profit and loss statement. Okay. So the financials we want are the last 3 years federal tax returns, each page stamped not verified, and the first page signed, and the income statement, also called the profit and loss statement, again stamped not verified by business team, and the final page of it signed by the business owner.
And that's the basic business team requirement. But I also kind of demand from the seller a 3-year ending P&Ls, 3 years, because the P&Ls have information on them that may not appear on the tax return, more detailed information. such as in the cost of goods, cost of sales, revenues, breakdown according to category of what was sold, labor, labor, cost of labor and parts and so on.
And the financial numbers you put out, then you use for you base that on the tax returns, but then you provide the profit and loss statements additional to provide more kind of detail on a number of topics. Correct, Roy?
Yes. Jeff, I was just wondering, those tax returns for this listing that you displayed, how is it that those tax returns don't have the owner's signature? Because the tax returns copies must have been received from what was submitted and must have been signed. I'm just technically wondering why.
Yeah. Very frequently, there is a copy that is signed, which is basically the copy that is sent off to the IRS. Nowadays, I know my tax returns are always electronically signed. So I don't know that I have a copy of my tax returns that have my actual signature on them anymore. And when I get them all from my accountant, I don't think I ever signed those copies. Those are the copies that are generally given to us, are the copies that the business owner's accountant has prepared in the normal course of completing taxes. And sometimes they are not signed. And so what I'm saying for our policy is we want the seller to go ahead and sign it. And we're doing that mostly just as evidence that he has seen this thing. Okay.
Yeah, thanks.
I'm sorry?
No, I said thank you.
You bet. You bet. And John, what you just heard from Roy is how another experienced associate uses profit and loss statements. He uses them for expanded information purposes, but not for the reporting of things. And frequently, also, when you show a client both a tax return and a profit and loss, you have to be prepared, as I know Roy is, to explain that, accountants preparing tax returns categorize things differently. And so there's not always a one-on-one match.
Right. I mean, I understand all that. And that's where I'm a little confused, because when we had this conversation during the break, you basically said, John, just get the last 12 months on the P&L. That's all you give them. And here's Roy giving them stuff that if I was a potential buyer, I'd want all the financial information that I could get. If someone said, I'll give you the tax returns, but I won't let you look at the financial statements, I would say, that's fine. I'm leaving. So I understand what you're trying to get around, but it seems to me you've got to disclose all these things. And there's always going to be a difference between the tax returns and the financial returns, even if everything is up to snuff, because tax accounting and financial accounting are two different birds. The easiest one is depreciation. There's always going to be a difference there.
Sure.
And of course, the tax returns, the genesis of the numbers on the tax returns come from the financial statement. So it just seems to me you've got to show them the financial statements. You can tell them what you're doing. If anybody has a brain, they can understand what's going on. But and of course, all the rules in the real estate regimen are for disclosure and letting everybody know everything that's going on. So that's where I'm kind of befuddled about all these things. And I just try to understand business teams' policy.
And I would say that I would say in general, as I think about the correct answer, business team follows what I call phased disclosure. We will give the business profile to absolutely everybody. There's no qualification. anybody who wants to see it. In fact, we basically advertise this on our website and on other websites. For people who we feel, who we have interviewed, screened and educated and have signed a confidentiality agreement, we will give them a certain level of information. For myself, that level of information is, generally speaking, the tax returns and the most recent income statement covering the period since the last tax return. During due diligence, at least, it is absolutely appropriate for them to request and receive in addition to the tax returns, the income statements and other financial information pertaining to the business.
Jeff, what I would appreciate, I mean, I understand what you said, but I would just like to have a schedule in writing, so I'm not making any errors there. And if I got into some kind of discussion with a buyer, I would say, well, look, I can disclose this when we get to this point. I can disclose this when we get to I, whatever it is, just so I know what the rules are. I really don't have a dog in the fight.
And
okay.
And my answer to that and how I explain it is as I have just done. I frequently talk with both sellers and buyers about the concept of phased disclosure. That basically, in terms of financials, basically we provide the recast income statement. We should have available for them to physically see if we are sitting together in the same office, kind of thing. Although I suppose you could do it on Zoom as well. They can see the okay, here is the 2017 tax return that supports this, but this is essentially the financial information that we are giving them. Then once an offer has been made and accepted, then they can get the more detailed information. But I'll be happy if you want to try to write something up to that regard.
Yeah, I would like to have something that I can make reference to. And last comment I wanted to make when you were talking about this thing in escrow, the state of California making you allocate values and stuff. I'm assuming everybody's familiar that on any kind of acquisition of assets, you do have to have a form signed by the seller and buyer for tax purposes. And obviously that is done by the CPA, whoever's doing it. So I don't see how you could get out of escrow without that CPA on both sides, whoever's going to do it looking at it, because you don't want those numbers to differ from what you're actually filing with the IRS.
I agree.
Okay.
I agree with you, absolutely.
Where are we in our manual, Jeff?
Well, we are not in the manual right now because I'm taking a slightly different tact because I think this will show it better, but we will follow up on stuff in the manual.
We're in between the lines.
Yes,
I just
want
to make sure I was following. That's all. Thanks.
What I am wanting to show you now is kind of the end result of the packaging effort. Okay. This is a well-packaged listing. I'm sorry.
Oh, Jeff. For the income statement you received, the broker received, and the tax returns, do we have to have a seller sign? Because the recast gonna copy paste all these numbers from tax return, and the seller gonna sign.
You are correct that the seller will sign the recast income statement. It is also business team's policy that for all the financials, the 3 years of tax returns and the current P&L or income statement, that they be stamped with that not verified by business team and they be signed by the seller. The tax return, we want them to sign on the first page where there's a signature block. The profit and loss, we want them to sign on the final page that has the the net income line.
Jeff, for the listing which you have shown inside Glass, the CBR was made on which software?
I don't want to talk about that right now. I don't even want to talk about CBRs.
No, I just want to know whether it was.
I don't know. I assume it was probably made using Microsoft Word, but I don't know. We'll have a separate class on CBRs. Okay, you have a copy of the listing agreement. Now, in this particular one, they used our engagement agreement form, which we will talk about briefly. Generally, this form, we're not going to talk about it now. We'll talk about it towards the end of the class. Generally, this form is used when we are certain that the business is going to sell for more than $1 million. There's a space for miscellaneous and a form we need if the business is a corporation, and this one is a C corporation, is this approval of sale by sellers, directors, and shareholders. We also call this a corporate resolution. And basically, these shareholders of the firm are resolving to go ahead and sell the business Insight Glass. We have a similar form for LLCs, and we also have a third similar form for investors. I'm sorry, for partnerships.
S corps too.
Well, S corps use this one because this is the corporate version of it. But S corps absolutely too. And just so you know, if you are the listing agent for this and you put one of these forms in the wrong category, see this thing over here that looks like a bullet list? Click on that. And you can recategorize things. For example, technically, this one should go under resolution. The approval of shareholders should go under resolution for corporate resolution.
With a corporate resolution, the signatures required. All the shareholders or the percentage majority would qualify that for us. What if there's shareholders? This happened where a number of shares are distributed to a half dozen family members. Aunt Millie, grandchild Sally, and 5 shares. So can you have like over 50% would qualify this or not?
Well, what it says here is under name and signature, all directors and majority in interest of shareholders must sign. So in that scenario you gave, like if Aunt Millie's got 2 shares of it, I'm not sure that you really need to have her sign. But anyone who has a legitimate decision-making claim in what happens with the corporation, you should probably have them sign.
Okay, so here there's 4. I don't have my eyeglasses on, and the last names are all different?
Yes. It looks like a couple of them are the same. There's Donald Andres and Craig Andres.
Brothers, I guess.
Or father and son or something like that.
Father and son, all right.
Father and son.
Or husband.
Yeah, it could be husband. Yes. We live in 2020, guys.
In this case, Donald is the father.
There you go.
Craig is the son.
Hey, Jeff, this is Merrill. Let me pass on one experience. I listed a company with 46 shareholders, and what they did is they had a special shareholder meeting to take a vote as to whether they wanted to sell. And this was documented by the chairman of the board, and the votes were kept in the record.
There you go. A copy of that would satisfy the corporate resolution part of it, because that's literally what that was. They were doing exactly what they were supposed to do.
So would that be listed with this form as well?
Well,
Or no?
I assume the minutes resulting from that would be adequate for this, because they were voting to decide whether to sell or not. Is that right, Merrill?
That's correct. And the minutes of the shareholder meeting was filed with this paperwork, and the votes, the actual voting proxies and so forth were kept on record if anybody ever wanted to go back and check it.
Perfect. If it is a two shareholder S corporation with, the two, basically one spouse has 50% and the other spouse has 50%, it's simpler. But that's an example of a more complex corporation. So good. Thank you for mentioning that. Okay, I want to mention something here. You remember up here, we had the recast income statement in PDF form, and that you wanted to have a signed copy of that, okay? Down here for recast income statement, we want the Excel version, okay? And as you can see here, whoops. Let's see.
Excel takes time to load.
Okay, so here is the Excel version of it. We upload this here, and actually this is where the recast income statement pulls data from to produce these numbers here. So if you don't attach that Excel version of the recast income statement, and you attach that right here under recast income statement, if you don't attach that, then you won't have any financial information in your
Blind profile.
Blind profile, correct. Yep. So be sure to do that. Okay. Another document is SBA pre-approval. We always want to try to get pre-approval from an SBA lender. And here's an example of what one looks like. Pardon me. So there's the asking price, 20% down payment. So they believe they would be willing to provide a SBA loan for the balance. And they always put a caveat in here: actual loan approval analysis will include other factors such as industry experience of applicants, collateral, etc. So it's not nearly as solid a pre-approval as a pre-approval to buy a home, but it's what we've got. Here's one that from Scott Cisneros of Union Bank. So good job. You got two pre-approvals. Seller and buyer disclosure. This form, we have the seller, we help the seller complete this. Basically, it is a bunch of questions, yes or no questions. In most cases, the answer is going to be no. Sometimes there's a yes answer, like this one. Is there any one customer who accounts for more than 10% of annual gross sales? If yes, list each name and indicate the approximate percentage of the annual gross sales and any relationship to the business or its owners. And in this case, Mike has included a note, 2 clients over 10% of sales. Top client is 21% of sales, with the next largest client at 12%. Okay.
They also never usually put the name because that's their client. And if you have a competitor looking at this, the seller really does not want the name mentioned.
Exactly so. In fact, generally speaking, remember we were talking a moment ago about the phased disclosure things? It is not at all unusual for names of clients, vendors, and employees to only be revealed after close of escrow. For the purpose that Michael just commented on. Here's another question and an explanation. So you see that if there is a yes answer, you should explain it. You can put it right on the form like that, or you can attach another page to this document that answers each of the specific yes questions.
I'm sorry, Jeff, would you repeat that part Michael said, which part is not disclosed until escrow?
Michael commented in this, it says, is there any one customer who accounts for more than 10% of annual gross sales?
Okay. Got it.
Name. And generally, sellers are very concerned about revealing the names of customers or clients. Right. And my comment was that it's not at all unusual for the names of customers, vendors, and employees not to be revealed until escrow has closed.
However, you may get, and frequently happens during the due diligence period, a demand for the customer list.
Mm-hmm. Yes. So you have to decide how to manage that with the interest of protecting your seller's confidentiality. The example given of you do always kind of have to have one eye that this might be a competitor and they are looking to steal employees or customers or vendors or something. One way to handle that is you remove every other contingency, and then just at the end, you finally reveal who the customers or employees or et cetera are. But
by the time of the due diligence, the seller is going to know whether the buyer is a competitor or not.
That's very true.
Jeff, sorry.
Well, I was just going to say, also with employees, I never put in the employee's name, but I do put in their title.
Yes.
So it's just an easy way to get around that.
Yes.
You can put in their title.
That is an excellent practice.
I put in I'll have their first name put in, Mike, Joe, Barbara, but not their last name and their position.
Very good.
Is this a form that you need to have them sign at the time of listing agreement sign?
You don't need to have them sign this at the time of listing. You can do that. What I normally do is do it subsequent to that. You must have this in order for the listing to be made current.
Okay.
But Jeff, this form, this form actually has an asterisk on the Team Magic. So I thought that's one of the required part of the listing package we have to sign when the listing signed. I thought that.
Yeah, I understand that. I'll show you the slide that has the asterisks on it. And those are for things that must be present in order to make the listing current.
Okay.
Yeah, so that's what this is, okay?
Jeff, would you make a general comment about the broker either overtly or inadvertently participating in the due diligence process? You know, I'm imagining myself calling customers saying, I'm helping to arrange financing for this business. Would you verify your relationship or whatever. But how about just a general comment about broker's participation in the buyer's due diligence?
I would say that our participation is to provide information so that they can make their decision. We do not verify anything, and intentionally so, just because we can't. If they want to verify something, we can provide them information to help them with their verification, but we do not verify anything. Well, frankly, there's a twofold reason for that. From a professional point of view, we would be putting ourselves in a conflict of interest. And then the other reason is the lawsuit, the protection from lawsuits. If we verify something and say this is real, this is true, and it turns out not to be true, we're in trouble. So we do not verify anything. We provide the ability for the buyer to verify it. And there are some things like let's say the detailed customer list. It is not unusual for a seller to say, I'm not providing that till close of escrow. And then it's one of those situations where the buyer has to make a judgment. Okay, am I willing to move forward with that risk or am I not? And it's the buyer's call.
Jeff, just an interesting thing on that. Many years ago, my client was selling to Kimberly Clark $40 million. And we had Merrill Lynch in there, investment bankers and all that. And my guy walked away from the deal because Kimberly Clark would not lock everything down until the list of all our customers was given to them. And of course, we were selling to their same people and they wanted to know all that. Guy walked away.
Yep. That happens.
I noticed that on the page you got on the screen right now, there are 2 boxes not checked.
I noticed that. The way that I normally do this actually is when I'm doing this form, I fill this out. I sit with the buyer, the seller, and I ask these questions one by one and get their answers and note them in. And then if there needs to be the explanation, I take notes on that. And then I basically prepare a final copy of this for the seller's signature. So I try to avoid unanswered questions. I would say that with just about any form, generally speaking, our clients may well leave something blank that really would be better if they didn't leave it blank.
I just looked at my notes and I do have that now filled out, and you will see that uploaded in a few minutes.
Very good.
And all of the other P&Ls and the recasts have also been updated since this.
Outstanding. Well, and I would point out too, guys, that remember we're a team. And for example, I know Michael Hamilton to be an excellent business broker. I also know, like all the rest of us, he's a human being. And while he is excellent, he's not perfect. None of us are. And it really helps. Part of the purpose of presenting our listings at the meeting, we're trying to educate our colleagues, of course. But part of it too is our colleagues can sometimes make us see something we missed, which is all to our benefit, because the better our listings are packaged, the better we can get this business sold. This is my. It is time for me to mention something. Our name is Business Team. our and that is deliberate. Our intention is to be a team. Frequently over the years, though, I have talked, particularly with new associates, who have concerns that say, well, you know, I get the idea of teams, but usually teams imply different jobs among the team members, right? You know, like a first baseman has a vastly different job than a pitcher on a baseball team, right? And both of their jobs are different from an outfielder. And so who would have an answer to that if someone was saying, well, how can we be a team if we all do the same thing?
Takes a village to raise a child.
Well, the answer that I have come up with is that I think the sort of team that we are like is like a track relay team. Okay? They are trying to win as a team, but when an individual runner is performing, they are basically individually doing their thing, right? But what is the key point in a track relay team's teamwork? It's the handoff, right? If I am running along, I probably don't run as fast as I used to, but if I was running along and fixing to hand off that baton, if I drop the baton, we're going to lose that race, no matter how fast my other three team members can run. And in my view, the quality of the listing package is like the handoff for a track relay team. It's something that you have to get it right. And the better you do it, the greater the chances the team's likelihood of success are. So, you know, do your best with this. As Michael has illustrated, update it as you go, because there's always something that can be done to improve it.
In the seller and buyer's disclosure statement form, there's a template in Right Signature. I've never looked there or used one, a template, but are you aware of that?
I don't know the answer to that.
I'm aware of that, but my experience is if you try to get a buyer, or I should say a seller, to fill this out, it will never happen. You have to do it with them. Do it. Trying to get sellers to fill out a long form is just monumental.
That's my exact experience as well. Okay, so you probably have noticed that the seller initials and dates the bottom of each page, and then signs at the bottom of page 5 and dates it, as you see here. Okay. Then, when we have a buyer, and the best time to do this is as the buyer is making the offer, have the buyer complete their disclosure. And again, they should provide any explanations that are appropriate. The buyer signs it. Then when we present the offer to the seller, we present the buyer's disclosure, and then the seller signs it. And so, properly filled out, this will have, when we are packaging the listing, we get the seller's initials and or signature on each page, except the very last one, which remains blank for the buyer's use. Then when we are writing up the offer, when we are showing the business, we show this to the buyer, who initials each page, makes their own disclosure, and signs their page. Then we submit it back to the seller, who signs it, acknowledging that he or she has received the buyer's disclosure. Okay. You should know that at close of escrow, If you do not have a copy of this with all of those initials and signatures on it to include the sellers, you will not be paid by business team until you have that. Okay, so it's important when you're closing a deal to get this thing signed first by the seller, then by the buyer, then again by the seller.
I would suggest something, Jeff, that if you represent the buyer, when you are writing up the offer, that is your maximum time that, or the maximum point of pressure that you have to get the buyer to fill this form out. And you can go ahead and blame the seller agent saying that he wants this filled out with the offer for this offer to be valid. You can blame the seller agent completely.
Yep.
And because I have had buyers who, once the offer was in, it was signed both ways, they didn't want to fill this form out. And if you do it at the point of the purchase agreement, that is your maximum point of pressure that you have.
Can I ask why wouldn't they want to sign it, Mike?
This was a guy, background was a finance guy. Usually the finance guys, the private equity types, they seem to be very resistant to all forms. That's just from what I've seen. And so just tell them these forms have to go with the purchase agreement, the agency disclosure and the seller disclosure. Just, if you get those, then you're covered. And
yep.
So that's why the seller disclosure is part of the listing, the representation agreement package on Team Magic. But that seller disclosure, that needs to be signed before the listing is made active.
That's correct.
Yes, so
That's
you've
correct.
already have that. And if you're working with the buyer to write an offer, you want to include that as part of the offer paperwork as routine, you know, and he's got to fill all that out and the buyer part of this disclosure statement, and send that in with your offer.
Exactly.
Yeah.
Yep, that's the way to do it. That is exactly the way to do it. Just as one final aside on this, or one final comment, remember how I said you didn't get paid until you had this? There are actually 3 documents that you must have at close of escrow at a minimum to get personally paid from this. You must have the seller and buyer disclosure statement, as I talked about. You must have those agency disclosure forms. Remember, we talked about that for each associate who's been involved in this transaction. And then finally, there is a form that we'll talk about in the part 2 of this training, which is called the closing agreement and acknowledgement. And if you don't have those 3 forms, you will not get paid by business team until you turn them in. Okay.
And by then,
Seller,
you may have reluctance for either the buyer or the seller then to sign at that stage.
Yep, it's a whole lot easier, as Mike mentioned, and as I know you are thinking, Roy, that it's a whole lot easier to get these at the appropriate point as you're going through this whole thing, as opposed to after the transaction has been concluded. So we'll talk more about that later. Okay, so right now,
Jeff, can I ask you a question before we get away from that? What if the buyer says, look, I'm going to make an offer, but I'm not going to fill out that form? Would you say, well, I'm not going to disclose that offer to my seller? Because I thought you had a requirement to disclose offers to a seller.
we do have a requirement to disclose offers. I think that I would probably need to make a judgment call, a personal one. I think generally speaking, if they said, I'm not signing this, there is a strong part of me that might say, you know what? Thank you for your time.
Not worth it.
I think that would put you in a bad spot with the DRE if you didn't disclose that to your seller.
It might well, and I might do it in consultation with the seller. Mr. Seller, there's this seller and buyer's disclosure statement. The purpose of this is to protect both you and the buyer. The buyer has refused to make his disclosure to you. What are your thoughts on this, Mr. Seller? And
I think you'd have to go down that route for sure.
Yeah,
Sure, and
I'm
then-
going to try to get his reaction to that in writing, his answer to that.
Well, you put it, if you're talking about presenting an offer, is that what we're talking about at the
Yes.
time? All
We're
right,
talking
so-
about prior to, while writing up the offer, if the buyer refuses to complete the buyer disclosure
Sure,
statement.
you present the offer and point out that he has not supplied his buyer disclosure, and then you counsel the seller to write a counteroffer requiring that, plus any other investigation of the buyer's creditworthiness, whether he has a criminal record or any of that, and put that in writing in a counteroffer.
Good, very good.
Yeah.
Good job, Roy. Good job. Yep.
Jeff, if you update this page here, the new seller and the seller and buyer disclosure form in there now is completely filled up.
Outstanding.
It was on my computer, so
There you go. Okay.
there's been a few other forms updated as well, so it's
Very
all
good.
now.
We'll just take a quick look here, and then we're going to give you a hand, okay?
Jeff, in the right signature system, do they have a ready disclosure form? Because it's so hard to, to place those check box in the form.
Right. Yeah, this form here you're talking about, the seller and buyer's disclosure statement.
Yeah.
I believe I heard the answer that no, we do not have this in. Yeah, we don't have.
There's a template in right signature.
The recommendation is you not use right signature for it. Did I just interrupt you, Roy?
No, I said it, I was told maybe, in the staff meeting that it is a template under right signature to make it easy to fill out those check boxes. But Jeff was recommending to use just a hard copy between with your seller.
Well, if there is a template in right signature, you can certainly use that.
We don't.
Yeah.
I checked.
Yeah, actually, if I could interject here, because I use Right Signature quite a bit, is that the forms on Right Signature have been uploaded, it seems to me, by individual agents and not necessarily by business team or administration. So I've used anything that's already there with with a lot of caution, because it's probably just someone just uploaded something, and it's very difficult to remove a document from a right signature. So there's a lot of stuff on there that probably isn't very useful for the general agents. So you just be cautious. The other thing is that if you're going to use something on right signature, send it to yourself first, so you see what it's like as a recipient to fill it out. And very often you'll find that it's not very user friendly, or maybe even completely useless. So just my my 2 cents worth on right signature.
A valuable 2 cents. Thank you very much. Okay.
Jeff, just a thought about protecting the seller in these forms. I mean, you can bring home a form, you missed a box, and so the broker goes ahead and just checks that box. So what's the requirement to give a copy of these documents to a seller, anything that he signs? Or a buyer, anything that he signs?
I would say that they should have a copy of it. I mean, the first person we've got to disclose everything to is directly our client. So I would say that if they sign it, they ought to have a copy of it.
At the time, right, immediately after signing it, you should try to get them a copy. Yeah, that
That's
makes
correct.
sense to me.
And if you had signed it and somehow missed something and you wanted to go back and reinsert it, at a minimum, I think I'd have them initial next to the reinsertion, if that makes sense.
Yeah, you'll see that on page 5 if you look.
Okay.
Yeah, this listing, I was not there at the start of it. So I was brought in a little later. And so some of these forms were not filled out, but I didn't give this to them initially.
Very thorough, Michael.
Well, it was kind of it's an unusual listing and how I was working with the client because I never talked to them. It was all Ian.
I have a question. I know we moved on from this subject, but if anyone, Jeff, anyone that can answer more about getting qualified or the business qualified for the SBA portion that we covered a little bit prior to this? I'm sorry to take us off this subject, but I just want to make sure I get that.
That's a good question. Business team has relationships with a number of SBA lenders that we have used over and over and over again. For example, one of them here, Scott Cisneros from Union Bank. In this, it's his title is commercial loan officer, but frequently people in this position are also called a business development officer or BDO. You should have a list of SBA lenders, the BDOs, that you should develop relationships with them, and you should have them their contact information shortly available. I'd also recommend Bob Porter. And then what's the fella? Oh shoot, I can't think of his name. Well, I'll think of his name. There, get Cisneros' number, get Jonathan Park's number, get Bob Porter's, get a few others. Listen to who. When you look at a listing packaged in Team Magic, look to see who did the pre-approval, and find those people, and then get used to working with them. Because if you're dealing with a Scott Cisneros, for example, you are far more likely to get a completed SBA loan than if you're dealing with somebody who's never done an SBA loan before. So those are important relationships for you to have. In fact, I have heard, I think this was a realtor, but it's the same idea, talking about an agent should have a power team, which should absolutely include an escrow holder or two, an SBA lender or several, possibly a competent accountant. And by the way, a lot of you folks have commented recommending various accountants for the need that Kathleen and I have. Have a team who can help you get this done and work with them repeatedly. And that will help make you money.
Jeff, is it possible at some point then one of, or maybe two SBA lenders to give us a little training or,
Yes, Charlene, for example, has arranged for, seems like we have a new SBA lender just about every week speaking to us. Or if they don't speak to us, this is at each team meeting that we have on Wednesday mornings. There's almost always an SBA lender there. A recent one, they were a no-show, but usually Charlene has one or more, one scheduled each and every week.
Oh, okay.
Bob Porter is from which bank? Sorry?
Plumas, Plumas. Okay, so I have 11:51. Let's go ahead and take a 10-minute break and start at 1 minute after the hour.
Thank you.
Okay, folks, it's 1 minute after. Let's go ahead and get started again. I see a question here about getting SBA pre-approval. James, since you asked the question, are you back from break?
Sorry, yep, I'm back and you answered it after I had asked that. Thank you.
Okay, well, just to amplify, basically have those list of people and then just call them up and say, hey, I've got a business I'd like you to pre-approve. They're probably going to want to see the recast income statement and the supporting financial information. And then they'll make their determination.
Excellent, thank you.
You bet.
Jeff, can I ask you a question before you get into the lesson?
Sure.
On a proprietorship and the tax return, are you only requiring that the client give you a copy of his Schedule C and schedules related to that?
Correct.
Okay.
Yeah. In fact, I emphasize that I don't want any other portion of their 1040.
I think I was the one that asked regarding the SBA, Jeff. So you're saying give them your financials and see if that business qualifies? What do you go about doing? Can you explain that a little bit more?
Sure. So let's say that you're going to work, that one of the folks that you like working with is Scott Cisneros from Union Bank. You call him up and you say, hey, Scott, I've got a business. You might talk about the business a little bit. I would like to have you take a look at it to see if you could give me a pre-approval letter. And he will probably say, great, give me your recast income statement, give me your last 3 years of federal tax returns, give me the P&L since the last tax return, and I'll get back to you in a day or two. And so you just email those things to him and he takes it from there.
Thank you.
One of your test questions was techniques to get the seller to agree to a reasonable price. And is pre-approval for a lender a strategy that you might discuss with your buyer or seller?
It absolutely is. Good question. It absolutely is, because if the SBA lender refuses to give a pre-approval letter, can't give a pre-approval letter, it is probably a pretty strong indicator that either the price is too high or there's some other issue with the business that's going to make getting a loan possible. Another issue that is common is there are a number of perquisites that an owner might take from his business that essentially constitute tax fraud. And the SBA, as a government of the organization, is not going to use that as an appropriate add back to determine seller's discretionary earnings. So your calculation of SDE may have been, way up here, right? But the banker's calculation of SDE may be lower than that. And that's what the banker is looking at to determine the loan servicing capability of the business. There can be other reasons too, but yeah, so absolutely, you should do that. Okay, so now I'm going to go back to the slides. Oh, one thing that I wanted to give you an overview of what a package listing looks like. We have a tool in Team Magic, which is the packaging and transaction scheduler. I'm actually going to talk about that at the very end. Okay, so I will come back to that. All right, this is the document that, oh wait, I'm not screen sharing, am I? I better screen share. Okay, I had been, when I was talking about the transaction or the packaging scheduler, I had been looking at this, And I will come back to that. Okay, this is, remember Wen asked a question that said, well, I saw the asterisks on it. This is the page where she was seeing the asterisks, okay? The items on this list that have the an asterisk on it, whether it's an asterisk there or an asterisk there, those are the documents that are mandatory in order to have a packaged listing that we can, that the team leader can make current, okay? Just so you know why some of the asterisks are before the name of the document and some are after. The ones that are before the document, unless a document is uploaded to Team Magic in the slots for that, the team leader cannot make the listing current even if he or she wanted to, okay? So the business fact sheet, the agency disclosure, the listing agreement, and the seller and buyer's disclosure statement, those absolutely have to be there, okay? The other documents that have an asterisk at the end, like the blind profile photo, all of the financial documents, the equipment list, the lease summary, landlord letter, the lease itself, recast income statement for profile, those are all requirements. But if absolutely necessary, the team leader can still make it current even if those are present. But it would be very, very rare that a team leader would do that. Okay, so let's talk about a couple of these in a little bit more detail. But before we get there, a little bit about timing this thing. So you've taken the listing, you've given the seller the form information required to package your business for sale. Remember that one? We talked about it last week. So now the seller is putting those documents together. You should put gentle pressure on the seller to get them to you. Sellers are capable of infinitely procrastinating on giving those to you. And you can't do anything until you've got them, okay? And just so you don't think that I am being excessively hard on sellers, I have infinite powers of procrastination myself. In fact, around my office here, I have several monuments to my power of procrastination. But you still need to push them to get this done, okay? I strongly recommend that the first two areas that you focus on are recasting the income statement and getting that approved by the seller, and then also doing the work that we need to do with the lease and the landlord, okay? And the reason for that is, well, the lease and the financial information is just vital. The lease information, you do need to talk to the landlord. And I don't know how many times I've had the circumstance where I called and gotten the landlord's assistant, and the assistant says, gee, it's too bad you didn't call yesterday because the landlord has just left on a 6-month Antarctic expedition and there is no way to communicate with this person for the next 6 months. That's a slight exaggeration, but not much. So do a recast and do the get the landlord contact out of the way immediately, then do the rest of the stuff. Okay, just to review some of the things in the listing package, you've seen the, oh, I should say, when we do get around to giving you the quiz, which I'm not going to give you today, there will be a question that's something like list 4 items that are mandatory to make a listing package current. And you've got the answer to that now. You know that the things with the asterisks are what are current. The other stuff we want you to get to, but you have to have the things with the asterisks. Okay, we've talked about how Team Magic creates the listing summary, how Team Magic also creates the blind profile. We've talked about the business fact sheet and how personally this is one of the very last things that I get signed and upload. Here's the seller's
last item.
That's one of the last items because I am gathering the information on this as I package, as I do the rest of the packaging. For example, a portion of this deals with the sales and seller's discretionary earnings. So I need to have recast the income statement before I can do that. Similarly, there's a section on this that deals with the lease. I don't want to fill that in until I have talked with the landlord. So I take notes on this throughout, but I don't go final on it until I have all of the information that I need for it. Okay? We're talking about seller and buyer's disclosure statement. Here's the approval of sale by sellers, directors, and shareholders. We talked about that one too. Okay, so it is important that you contact the landlord early on in the process of packaging the listing. What you want to do is get a hold of the lease, and you need a complete copy of the lease. In other words, I bet we could find a listing in Team Magic where the original copy of the lease was signed in 1998. And every 5 years since then, there's been an amendment to extend the lease, and it might, change the rent amount or something like that. So that would be what? There would be the original lease plus probably 3 or 4 amendments extending it, right? So we need all of that. Sometimes the seller just wants to give us the most recent amendment. We need to try to get the whole thing. If we can't get the whole thing from the seller, we'll need to try to get it from the landlord. What we do is we read through the lease, we get the landlord's contact information from the seller, we fill out as much of this as we can, which probably really is only going to be these first 2 sections here. Then we contact the landlord. In a moment, I want to, I'll go through the 3 reasons we contact the landlord. But before I even go to that, I want to talk about you should, some of the first words out of your mouth should be, Ms. Landlord, I am contacting you in regard to a highly confidential matter. Your tenant, Mr. So-and-so, has engaged me to help him sell his business. And I wanted to call and introduce myself and verify some information and make sure I understood your process. Okay. And you are trying to do 3 things when you make contact with the landlord. Number 1, and this is a test question, by the way. Number 1, you want to make the landlord an ally. Generally speaking, landlords are not crazy about sellers or business owners who want to sell their business, because presumably that business owner has fulfilled all of the main criteria for that landlord, i.e., they pay the rent on time each month, right? And the landlord generally doesn't want to goof that up, would like that person to stay there paying rent until the ending of the world. Okay. So that's thing number one is we want to form a ally relationship with the landlord. I've been engaged. I want to make sure I understand the details of the lease and all of your criteria for approval of a potential tenant, and I want to help you get the best possible tenant we can. So you want to position yourself as being the land working in the good interests of the landlord as well as the buyer and the seller. The second thing you wanted to do is to confirm the actual details of the lease. Many business owners do not have the specifics of the lease at the top of their mind. So if you ask them about the lease, they may give you information that's generally right, but it may not be specifically right. And well, I have had circumstances where the sellers told me one thing, the lease says another, and then the landlord's got a third opinion. And we need to be able to communicate to potential buyers what is real regarding the lease. So we want to confirm information about the lease. And then the third thing is each landlord has their own process for approving a prospective tenant. Some of them have an application they want to have filled out. Some of them want to interview the tenant. Some of them might want a resume or a personal financial statement or a business plan or something like that. So it is a good idea to get that information up front. And I'd even generally put that sort of thing in the comments section of the listing summary, just so that our colleagues have that and know what's necessary. So get the lease, get a copy of the suggested landlord call script, which is on Team Magic. Fill it out as best you can. It's probably just going to be in the first two paragraphs here. And then call the landlord and explain, Ms. Landlord, I'm calling you about a very confidential matter. Your client so-and-so has engaged me to help them sell their business. I wanted to introduce myself to you. I wanted to confirm some information about the lease, and I wanted to get an understanding of your process for approving a potential tenant. Then you simply go down this and ask questions. I understand that the square footage of the premises is this amount. Is that correct? And sometimes the landlord may say, well, I don't have what's in the I don't have the lease in front of me. I'll have to look that up. Okay, that's fine. Basically ask your way through all of these questions and confirm the information that's in the lease. If there are options to renew, find out about those. Is there an option currently in force? What would the period of the option be? What would determine what the rent would be, and so forth. If there is less than 3 years on the lease, you might want to ask the landlord, or you should ask the landlord, are you open to the idea of writing a new lease for a qualified tenant? If they are open to writing a new lease, you should ask them what their their leasing commission is. We, of course, are mostly focused on simply trying to complete the transaction. But if we can also get a leasing commission, that's a good deal, and we have in fact earned it. So ask what their leasing commission is. Ask if they'll consider extending the term of the present lease for a new buyer. Then ask the sorts of questions that you to get an understanding, with these questions, you are trying to get an understanding of the seller's, the landlord's process to approve a new tenant. So, you know, do you have, we normally provide a financial statement and a resume. What else do you want? Do you want a business plan? Do you want an application? What is it? You also want to ask about what sort of qualifications the landlord wants the buyer to have. Many of them have a minimum net worth requirement. There's a question here, is there any type of tenant you would prefer not to have? The answer we're looking for is no, I don't want anybody with blue eyes. If they've got blue eyes, forget it. I'm not renting to them. But sometimes if you think about a typical shopping center, if they've already got a Mexican restaurant, they don't want another Mexican restaurant in the center, right? So that's the kind of thing that question is referring to. Do they have any future plans? Are they, going to change the building somehow, or not take any more tenants 2 years from now? Are you consider selling the property? Lease assignment form. We have a lease assignment form. They may want to have their own prepared by their attorney, or may have some other one. How's your relationship with the present owner? Is he late on rent or anything like that? All of those questions. Then I want you to write, and you are required to write an email to the landlord. Forget about this template that's in Team Magic. Don't worry about this template. Here's what you need to do with the landlord letter or landlord email. Write an email to the landlord that basically says, thank you for talking to me at lunchtime on Friday, November 13th. Here's what I heard you say. And then feed back every point that you discussed. The square footage is X, the security deposit is Y, this is the expiration date, this is the base rent, this is the amount of triple net. These are the options to review. Basically everything, just feed it back to the landlord. And this acts as verification that the notes that you took are correct. Okay.
Is this the time that, hey, Jeff, it's Roy. Is this the time that if the landlord agrees to pay a commission, let's say it's month to month right now, or the lease is to be renewed, that's when I'm going to go back and say, hey, let's sign a rep agreement or a listing agreement for this particular thing, right?
That's correct. And here a copy of it is right here. Here's what you have. Yep, you're absolutely right. You should always, if he says yes, yes, he does pay a leasing fee, be sure to get this signed so that you have an agreement in place to get paid.
Okay, cool.
Why would a landlord give a leasing fee? Because whoever the buyer is, the buyer has to sign an extension of the lease.
It's not necessarily an extension, though. The buyer may in fact sign a new lease with that landlord rather than an extension of the current lease. So you're right.
So how would that differ then? So say for instance, if when you're gathering the information about confirming everything with the landlord, the details, how they qualify a new tenant, and extend if they're doing a lease extension and all of that. So how would that convert to commission, which I understand if I get a new buyer or a new lease, or if the current owner doesn't want to have the new buyer go underneath their lease terms or whatever, I don't know. I guess if it's if their lease is not expired already, that would work, where there's no commission owed.
Yeah, in general, there are two ways that we go about getting the buyer the legal right to occupy those premises and operate their business there. Way number one is we attempt to get the existing lease assigned to the buyer. The landlord rarely, if ever, pays a leasing commission for an assignment of the lease. However, sometimes it is appropriate for the landlord to agree to write a new lease for the buyer. For example, maybe there's only like 6 months left on the existing lease, and the landlord sees it as an opportunity to improve their position. Okay. That is so if the landlord wants our assistance in actually writing a new lease, that is something that is routinely paid a fee. There's people that make their living just doing that. Okay, just getting leasing commissions. And probably we wouldn't even actually have to write the lease. An attorney would be engaged to do that by the landlord. Here is, just so you know, here is the lease assignment form on Team Magic. And I want to point out, it designates what the business's name is, the premises, the assignor, which is the seller, the assignee, which is the buyer, the lessor, which is the landlord, the lease deposit amount, when the projected close of escrow is, the specification of the lease agreement that is being assigned, and it says here the assignor, that's the seller, hereby assigns to assignee, the buyer, all those rights in the lease, including the lease deposit. Assignee hereby agrees to comply with all the terms and obligations of the lease. Each party shall perform the obligations of the lease and hold harmless and defend the other therefrom, assigner as to those arising before closing, and assignee as to those arising after closing. Assignor shall have the right of re-entry as reasonably necessary to exercise any rights held under any security agreement on the business assets or leasehold. Lessor consents to the above assignment, but no future assignments. Lessor does not release assignor from any liability under the lease. However, before holding assignor liable on the lease, lessor agrees to give assignor 10 days notice and opportunity to cure any assignee breach, and further shall give assignor opportunity to take possession of the premises under the lease. Lessor further agrees to hold assignor only and not assignee liable for the breach of any obligations of the lease based on facts occurring before closing. This document is effective upon closing. Each party warrants that he or she has carefully read and fully understands the provision. So here's the thing. If there is an existing lease, the lease is assigned from the seller to the buyer, and let us say that the buyer then defaults on the lease, on the rental payments. Who, according to this agreement, is responsible for paying those rental payments?
It says, huh?
It's the seller. It is the seller. Lessor does not release assignor from any liability under the lease. So the seller remains
liable
responsible for the payment of the lease of the rental money. This comes as a rude shock to many sellers, but this is typically the case in an assignment.
And generally that's when they have quite a few, much time left on that particular lease that they're in.
Correct.
Okay.
Or maybe some opportunity, options to renew or something like that.
Jeff, in your experience, not being familiar with this provision of existing lease agreements, are most leases, do they allow an assignment? Does the property owner typically always have the right to simply say, if you're going to sell the property, sell your business, I have the right to write a new lease?
The area dealing with assignments or new leases is one of the areas that you want to carefully review in the lease. Most leases have a simple phrase to the effect that the tenant cannot assign the lease without the landlord's approval, which shall not be unreasonably withheld. Meaning that if we follow the landlord's process, they'll assign the lease, and generally they are willing to write a new lease too, if that's appropriate. However, some landlords have other languages. Like I have frequently seen leases that basically say, you know, if the seller even thinks about assigning the lease, they immediately owe a $500 attorney fee to the landlord. And so you have to carefully read each one and confirm it with the landlord and explain it to potential buyers.
You know, that's a challenge though. I mean, in a lot of these assignments, they're not specific. They don't detail it. And the landlord, he doesn't want to relinquish that assignment because it minimizes his risks. I mean, he's got two guys on the hook. And I just recently seen a termination clause, and I got a buyer to buy it, and I represented a seller. And what happened is they took another 6 years on top of the 4 that they already had to inherit on the assignment.
Mm-hmm.
That's a 9 or 10 year lease under an assignment, and I got the seller off, right? But I mean,
yes,
those are tough to do. I mean,
yeah, I was also thinking when I had something that I seen come across where I think it was one of our listings, as a matter of fact, saying that they were just trying to get out of the lease, right?
Yeah,
that is a valid reason. We have sold a lot of businesses primarily because the seller wants to get out from under the obligation of the lease.
Yep.
However, most leases have specific language in them that pertain to when assignments can be done, the prerequisites for doing them, all that sort of thing. And they are all potentially different. You need to understand them and be able to explain them both to the seller and to the buyer.
correct. Okay.
So,
Yeah, Jeff,
Okay.
how can the buyer, or rather, sorry, how can the seller get out of any clause which makes him or her obligated to pay default rent?
Write a new lease?
He just requires the buyer to get a new lease with the landlord and cancel his old one, then he's totally out of it. That's the
yeah,
way to
because
do it.
if you think about even what we're going through right now with the COVID, right? And there's quite a few businesses not able to either continue their business, and they're not able to pay the lease, but they want to get rid of their business or sell their business, then when you're contacting the landlord, would you represent that to them? Hey, we got you a new buyer and we want to get paid commission. I mean, we got you a new tenant and we're representing the buyer as well. So that lease agreement commission, can we get paid?
I would say you're asking for trouble, but I don't run this place.
You can ask. No harm in asking. Also, bring in a real strong buyer. stronger than the seller. Then you'll get a new lease if you can make that happen.
And then that way it make it go away on the seller's end too.
Yeah, he might be happy.
I would think you'd have to be very careful about representing the seller's financial situation to the landlord.
An assignment of the lease and a new lease are basically the two ways of handling the lease. There are others, but those are by far the two most common. The assignment almost universally requires the landlord's approval, doesn't generally get the seller off the hook for responsibility for the lease. On the other hand, they may be marginally easier to transact, if you will. A new lease generally does get the seller off the hook. However, the current lease may have some terms that are advantageous, but may not be available in a new lease. So as with everything else, it's a mixed blessing. But I would be professional with all parties, be thorough, know what the lease says, sincerely want to help make it so that all three parties of this, the landlord, the seller, and the buyer, are all benefiting from this transaction. And that will help in getting either lease assignments or new leases.
And then if it's in that instance where a new lease is written, then that document that's on the screen does not need to be executed? Okay.
This is just for assignments. And I would say that we fairly routinely get paid leasing fees. Not always, but fairly routinely we get paid a leasing fee when there is a new lease. We would not generally get a leasing fee for an assignment of the lease because it's not a new lease. Okay, so we talked about getting the lease. We talked about preparing for the landlord call and then conducting the landlord call. We talked about writing a landlord letter, which we suggest you do via email, and ignore this template. Just say, thank you for talking to me on this day at this time. Here's what I heard you say, and play back all of the key pieces of information that you got from the conversation so that the landlord can email back and correct you if you have made a mistake or he or she didn't, exactly state it the way they should have or something. Then finally, you need to write up a lease summary. The idea of the lease summary is that our colleagues don't have to get the lease and dig around in it themselves to have all of the key information that they need to effectively sell the business. Okay. So if you put on here, see lease as where to find a piece of information, you've done it wrong. Okay. Now, this form is currently shown as required, so it's required. Much of this information is now entered into Team Magic itself. And I personally, like here, if we look here, see if this still works. Okay, good. If you go down here to lease, here is most of that same information. So if I were running the show, as long as this were filled out completely, I wouldn't require a lease summary. But since I don't run the show, this is the lease summary is a required document. And I'm trying to open the thing I don't need to open.
And the lease summary is a document in Team Magic.
It is a document in Team Magic.
Okay.
Okay. Here is the form that you use.
Pardon me, Jeff.
Yes, sir.
Sorry to interrupt you. Are you seeing the questions in the chat?
I am not. Let's see. How do I open up?
Oh, I can just tell you what the question is.
Okay, that'll work.
It's from Merrill, or Merrill, if you want to jump in and ask it yourself. It says, if the seller owns the building, wants to keep it and rent it to the buyer, would we ask for a commission on that or forgive it because we're already getting a commission on the business sale?
I would absolutely ask for a commission on that because he will, a leasing commission, because the seller who will now be the landlord is ending up with a tenant for his property, right? Provided by us.
It's also possible he has a broker that he has used for many years because he's already done that. I mean, has leased before. It's not like he's a newbie on the scene, you know?
That is correct. And that's certainly, that is not uncommon. But we always, you know, if we don't ask, they can't say yes, right?
Yeah, always ask.
Yeah, always ask. Okay.
I think it's included in the representation form. If
what is
if the
borrowed?
owner is the landlord.
I don't think that is not included. So you would need to get a separate leasing agreement. Okay, now we are going to shift topics pretty entirely here. Business Team has a program called Business Team Assist. This was actually developed back during the Great Recession. And what we experienced was that there were a number of businesses that would sell for a very low price. It could only sell for a very low price because in the recession, the business had been severely damaged, right? And our minimum fee is $15,000. And sometimes that might even be more than the seller could reasonably get for the business. So we came up with this thing called Business Team Assist. And basically, we're not taking a listing, but we are offering to provide certain services. So like for level one, we would estimate the most probable selling price of the business. We would advertise the business on our various business for sale website subscriptions. And we provide a copy of our offer form as a purchase agreement template. And our fee for that would be $1,500 paid up front, not dependent upon the sale closing. Level two, and then there was an option to have us write up a confidential business review for an additional $500. For level two, which was an upgrade to level one, so you had to do level one. The upgrade to level two allowed unlimited in-office consultation between the seller and the buyers. So we'd let them use our conference room. We would assist in negotiation and preparation of the purchase agreement. We'd handle opening and closing escrow, and we would provide transaction guidance all the way through. And that cost an additional $3,500. And then over and above the $1,500 to $2,000 spent for level one. Then level three, we would answer the phone. The calls would all come to our floor person. We would find the buyer. All that, we'd qualify the buyer. We would obtain confidentiality agreements. Excuse me, I said that the calls would go to the floor person. Actually, in this case, they would go to the agent who had put this Business Team Assist in place. We would obtain confidentiality agreements. We would coordinate the site visit or conference call. We'd negotiate any purchase agreements we'd assist in obtaining financing. So level 3, we were largely doing what we would do just in a normal sale, okay? For less money, but we're getting the money up front. Okay.
Jeff, is this still in place or is this retired?
This still exists. We do not use it very often, although with all of the uncertainty that exists here in the end of 2020, this may come back into play. And in fact, our colleague Sam Schuman down in Dana Point is at least in discussion with a business owner regarding this.
It hardly seems really worth even doing this because you're going to spend about the same amount of time and you're not going to really make any money.
Well, yes, but if you have an opportunity to make $1,500 or $5,000 or $7,500 and the money is paid up front, you might want to consider doing it, particularly if businesses are just not selling because owners are rightly concerned about the very low price that they would probably command.
I always heard some money's better than no money at all.
Yeah, are those fees considered commission or are those passed through to direct costs to provide those services?
I would consider them like commission, but we get paid upfront for them. We get paid when we enter into the agreement.
Jeff, Fred King here. Sorry, I'd interrupt. What is business team's cut and what's the agent's cut on these?
If I recall correctly, these are treated like any other money that we earn. It is split according to the commission split schedule that you have signed with business team.
Okay, thanks.
You bet. Okay, one other thing to talk about. The transaction that Mike Hamilton is working on that we looked at his listing in Team Magic, you'll notice that it had actually used an engagement agreement rather than a representation agreement. I would say that as a general demarcation line, well, you can use a representation for any listing you want to take. If you are reasonably sure that the business will be a more than $1 million sale price, you might want to consider using an engagement agreement. You'll notice that in terms of a fee schedule, it uses what's called the double Lehman formula, in which the amount of commission is reduced as the purchase price increases. It's reduced on the latest $1 million. So a business up to $1 million, it would be a 10% fee, or since this is for businesses that are going to sell for more than $1 million, we get 10% of the first million, then we get 8% of the second million, 6% of the third, and so on. But this is essentially a representation agreement. You should read through this before you use it, because there are certain places, this is in the form of a Word document. There are certain places where you need to insert things, like you can see right here. Maybe I ought to see there where it says minimum fee is, and there's just a blank space. That's where you would present your minimum fee, which probably would be, well, it might be, say, a I would think that I would want to have it to be at least $120,000, because if we just listed it on a regular representation agreement, we get $120,000 from $1 million sale anyway. So,
And Jeff, I wanted to mention, I know Don Baum has altered this a little bit where the first $2 million is at 10%. So you can tweak this if you want.
yes, you can. You can tweak this.
Generally up, not down.
Generally not down. There is also a famous case, and I forget all the details because it's starting to get, it was several years ago, but Ian and somebody had a listing on a software firm. And basically the seller did not think it was going to sell for very much money, and so insisted that actually our fee should increase rather than decrease as the price went up. And the darn thing ended up selling for like $25 million or something, vastly in excess of what was expected. And we got paid a much higher commission than we would have under the double Lehman formula. Consult with your team leader as you are thinking about doing this, and your team leader will probably consult with Ian about this one. Okay, one final thing. Sometimes our clients want an actual appraisal. And sometimes there are some businesses that there is it needs skills that we don't have. Okay. We have used business equity appraisal reports, or BEAR, on a number of occasions. If you feel that someone needs an appraisal beyond your capabilities, I would recommend that you contact BEAR. Here is basically a schedule for what they typically charge. And they are amenable to basically us billing the client and then paying BEAR, which gives us the opportunity to mark up the price to some degree. Okay, I have, here is what I am thinking of doing for the test. There was some material, there were some test questions for which material was not presented in the current modification of the class. I'm going to review the class. I believe I am basically going to rewrite the test to focus on areas that have been covered and areas that are important. And then I will also include a key points or a review of the class material, emphasizing key points, and then have you take the exam. Does that sound like a fair thing? Because I want to get you guys tested so that we can get you, certified in terms of your once every 2 years requalification.
When are you going to submit it? As long as it's soon, so the information is retained.
It will be shortly. It won't be today, but it will be shortly.
So it'll be a take-home open book test.
I beg your pardon?
Take-home open book test?
Well, the quizzes have all been done at your home.
I'm just kidding.
And
are you suggesting that you're going to send us the quiz like another day, and you're going to send a prep sheet with it?
Yes. A review of the training that was actually conducted and the key points, and then have you take the exam. Does that seem fair to you guys?
Very
Yes.
fair. Yes.
Hey, Jeff, one other question. When is session 2? Are you having that next week, or will we have a couple of week break?
We are going right into session 2. I am planning to take off Good Friday, or not Good Friday, Black Friday.
Okay.
And then, but we will have 4 sessions of session 2.
My only request, Jeff, is in the future, just if you could give us a lot of extra notice on what pages to print and not
Yes.
tell us like a day or 2 before so we can actually get them printed.
It would not
Print the whole
be-
book.
Yeah, the best way would be the whole book. But what I would recommend, as soon as you receive the part 2 book, go ahead and print the whole thing. Because I know you're like taking it to Kinko's to do that size. I'd recommend you go ahead and do that.
Okay.
So on the quiz 1, you cover question number 1, but the rest of them you didn't cover. Did you already cover it another time? There were 5 questions or something like that.
Yeah.
You cover one.
I have those 5 questions. I can ask that. I can explain them right now.
Okay, thank you.
Okay, so one of the questions was, a restaurant business has an adjusted cash flow of $50,000. What is a realistic price? The piece of training that you needed to answer that question was the general rule of thumb that businesses that sell for, or that have an SDE of $100,000 or less, tend to sell for 1 to 1.5 times SDE. This business had an SDE of 50,000, so 1 to 1.5 times that is $50,000 to $75,000, which was the correct answer. Then the next question: a manufacturing business has an adjusted cash flow of $150,000. What is the price? Well, the very general rule of thumb for that is businesses with SDE of over $100,000 tend to sell for 2 to 2.5 times SDE. This has an SDE of 150, so 2 times is 300,000. 2.5 times is 375,000. I would emphasize that those are very general rule of thumbs, and I think you're far better off whenever possible to use actual comparable sales data, but those are very general rules of thumb. The next question was, the owner of a business takes a $4,000 a month draw, but it does not show on a tax return. How would you account for this in adjusting your cash flow?
You don't.
And that is the correct answer. You do not account for that. You can only add something back if it is taken out.
If it is what? I'm sorry?
If it is taken out. If it is subtracted as an expense, then you may be able to add it back. But if there is no such expense, you can't add it back. So for example, if you think of a sole proprietorship, the bottom line of a sole proprietorship tax return or P&L, that's basically the proprietor's earnings. That's the money that he's making. That's his salary, if you will. The draw probably just comes out of money that is saved in the bank account. So they're paying out of the bottom line as opposed to paying a salary. So the bottom line is bottom line. Unless there is a deduction for something, you cannot add that amount back, even though the seller says, "Oh gosh, I pay myself $4,000 each week or whatever each month." It's got to be taken out for you to add it back. A fuller explanation of this has to do with balance sheets, and we're not going to get into that today. Although at another point, I think that would be a worthwhile discussion. Okay, then here's the last question, I think, of the ones that Kimberly was referring to. Owner and wife work full-time in the business and take no salaries. What effect will this have on the adjusted cash flow on SDE?
Negative.
It would be a negative adjustment. Again, they take no salary, so there's no salary to add back, but the net income of the business includes basically the effort that both of them put into it. SDE assumes one full-time working owner, so we would need to have a negative adjustment for a hypothetical salary for an employee or employees to do whatever work is done by these two owners, working owners, that could not be done by a single full-time working owner.
So for example, if a SDE was 100,000 according to their report, and then you would subtract, let's just say, average manager's salary of 50,000, then bottom line would be 50,000.
Well, yes, but I want to put one thing in. This isn't a manager's salary necessarily that you are subtracting. Let us say that between the two of them, there are 20 tasks that they do each month, okay?
Mm-hmm.
But let us say that it would be reasonable to assume that a full-time working owner working 50 hours a week in the business could do 15 of those tasks. So you just need to figure out hypothetically what it would cost to hire an employee to do the 5 remaining tasks that the full-time owner could not do. And that will probably be quite a bit less than someone to manage the business.
Mm. Or you could just add a little bit to the current manager's salary, another 5,000, 10,000, instead of doing a full 50,000 manager salary.
Take out of this the conversation of the manager, because that's most businesses, the manager, most businesses we deal with, the manager is the owner.
Right, okay.
Just to reconfirm, today is the last day for part 1.
Today is the last day for part 1. On Monday, I will tell you what's going on with the test. We will have a modified test. I will also give you a review document, okay? So you can read through the document and then take the exam, and I will sort out the details of that between now and Monday, okay?
And how do we sign up for part 2? When is that beginning?
Part 2 occurs next week. So just be here next Friday and you're in part 2.
Do we have to sign up in order to receive?
Did you sign up for part 1 or did you just show up?
I signed up.
Okay, whatever you did before, do it this time. Do it for part 2 as well.
So we'll receive an email inviting us.
Yes.
Okay, thank you.
I'll send another email reminding everyone.
So
All right.
Jeff, do we have anything on Monday? You just mentioned you're gonna say something on Monday.
What I said was I'm going to have my. I hope to be able to roll out the test that we're going to take since I hosed up the quiz thing.
Oh.
Well, should I put something on my schedule for 9 or 10 on Monday or no?
No, I'll give you 24 hours to complete it. How about that?
Okay.
So you will send us an email. We are not going to sign up for online.
Are you talking about getting registered for next week's class, Balraj? Charlene will send you an email for that. Yes.
Oh, okay.
How can we recheck whether we signed up or just showed up?
Charlene, Charlene, is it a correct statement that you've been keeping careful attendance on all parties in these meetings?
Yeah, so you don't necessarily need to sign up. All you need to do is, yeah, just show up during the meeting. And then from here, I usually check attendance twice during the training just to make sure that everyone's staying on.
You should check with your admin, local admin like Andrea or Marion. And they're the ones that sign you up usually.
All right, thanks for the training, Jeff. I got to go to another meeting.
Am I in that meeting with you, or what is?
No, not today.
So Jeff, when you're talking about tests, are you talking about something different than quiz?
Yes, I am, because the quiz is messed up. Okay, we've had a number of problems with the quiz, some of which you have experienced, like questions that you hadn't been taught the answer to, and some of them in kind of software type problems. I was going to make a joke about software problems, but I'll just keep my mouth shut. Particularly if we're in Wisconsin or Michigan or wherever that was. But the quiz is messed up. I'm going to correct it by issuing a test that will cover the ground that we actually covered. That will include a review document so that you can review it before you take the test. Okay?
Okay, thank you.
Have a good weekend.
Thank
You
you.
too.
Bye.
Everybody have a good one. And
Hey, thanks, Jeff. Enjoyed the class. We'll see you in the next session. Oh, this is Roy in Sacramento. Thanks a lot again.
Thanks, Roy.
Thank you, Jeff.
Questions and comments through the class.
I appreciate it.
One more
Thanks.
question before you go.
Yes, sir.
I just started thinking about it as we were talking, and I don't want to put this to bed, so I don't have to think about it ever again. And I'm going back to using the tax return for SDD calculations in our example that the guy was omitting income. In our SDE, when we make, and the reason for that was because that was tax fraud. We didn't want to be involved in any kind of verification of tax fraud, correct?
Correct.
Okay. So I thought when we were doing SDE, for example, we had no problem, for example, making adjustments with regard to, for better choice of words, overstated deductions. For example, a guy was writing out personal expenses on his tax return. When we got into it, we found out that it wasn't so. And I know at Link, we always made adjustments for when someone was, what's the word I'm trying to think of? When they're writing down the inventory, okay? And I assume we make adjustments for writing down the inventory at BT, or do we not? Well, but not to confuse the issue, because I don't think we have to focus on inventory. Because I think you agree that we do correct deductions that are personal in nature on our SDE calculation. Is that not correct?
We typically do. I think that here is how I would here's how I would answer your question, I think, or kind of answer your question and then maybe open myself for another one. You see here on the seller's disclosure statement, question 2 is, are there any revenues or expenses of the business that are not clearly reflected in the financial statements you will be presenting to a buyer? If there are additional revenues or expenses, the seller should answer yes and indicate what they are, either in this little space here or in a separate sheet. Okay. We will continue to adjust the adjust we will recast the income statement, recast the tax returns to calculate SDE following common methods used by business brokers and controlled by Ian. Okay. So for example, generally speaking, if the guy, $1,000 a month of his auto expenses are actually the lease on his non-working wife's Mercedes, I'm probably going to add that back. And on the recast statement, I will clearly show that the seller says $1,000 a month is him paying for the lease on his wife's car. And we get his signature on the bottom of the recast income statement. So he's verifying that. In this case, on this document, he has an opportunity to express any revenues that he is collecting that he did not report on his income tax return. And I know that this is kind of a double standard, and
Well, it's not a double standard. It's inconsistent. And I think I can draw a demarcation line for you in your thought, because there's not any question that in fact, I brought this up with the CPA one time, and I said, look, this is tax fraud. He says, no, John, in the CPA world, this is, how did he phrase it? Enhanced deductions. And I said, well, in the legal world, this is tax fraud.
Right.
And I was an IRS lawyer, so I do know what tax fraud is.
Sure, I'll let you do.
All right. So overstating deductions is tax fraud, and writing down your inventory is tax fraud. Question is whether it's civil or criminal. That's really the only distinction. But I think in your case here, when you're talking about where the guy was omitting income, I think your escape hatch, if I was arguing your case, is that, look, when we make these adjustments, we're making adjustments with regard to numbers that were on a return that you saw. Whereas stuff that is being omitted is not on any return. We're not even getting into that bailiwick. I think that's how you can make a demarcation. But to argue that we don't want to be in the position of verifying tax fraud, well, when you lay it out that the guy's taking excess deductions, then he's writing inventory or writing down inventory, that is tax fraud. So I wouldn't ride down that avenue for you, if you will. So anyway, you've answered my question the best you could, and I understand what's going on. Again, my whole goal is I just want to understand what BT's position is, because obviously I have to operate within their parameters.
Yes, and I would say that the expression that I gave and your very accurate and well stated demarcation of it is about as I understand the thing.
Now that question was for the seller there, but was put into this form not that long ago, right? That was added.
Well, for you and I, not that long ago is a relative term, I think.
Yes. And so who put it in, and what was the reasoning behind it? I imagine to protect business team.
Yes. Yeah. That question exists to protect business team, so that anything different from reality in our financials, it's the owner owning up to it, if you will.
Oh, and Jeff, I do make adjustments for when I find out that the inventory is written down. I assume BT is with that, or are they not?
Now, here is what I am. Let me see if I can state how you are using written down, because I know that this was something that Ron Horace was very attuned to.
Well, I can give you an easy example, because I had a manufacturing concern. In fact, any manufacturing company, I think it was almost a rule out here that they all write their inventory down. And basically, you look at the balance sheet. the particular case I had, and his inventory was $7,000. But then when I got and said, what is this stuff worth? Oh, it's worth $500,000 at least.
Right.
And then I had it valued, and it was that. And obviously what happened was this guy was writing it down over years, probably 35 years, and came to that result. So I said,
And
look,
so
I'm
that-
not offering this for sale till we get a real valuation on this. You know, I don't care how the taxes shake out, but we got to have some reality here, if you will.
Right. So by writing it down, you mean that on the tax return, they are overstating their cost of goods sold, thus understating.
Right. To underreport the income, that's how you do it.
Yep, exactly. So, and the correction for that would show a higher SDE if you made a correction for that.
Correct.
My experience with Ian, he would say, no, don't do that.
Okay, well, that's what I'm trying to get straight, whatever the policy is of BT.
Yep, I would say that is my understanding of Ian's policy. Now, next time you and I are in the same place with Ian, whether it's on the phone or someplace else, why don't we ask him that specifically?
And,
Well, we may, I don't know how open-minded Ian is, and I do know just from being on Earth for the length of time that I've been, if you find someone that's not open-minded, then you shouldn't even attempt to try to persuade them.
Well,
you have to find
I
out
guess
what
I'm
it
saying,
is.
go ahead, Ray.
Oh, I said, first of all, you define, it's a case-by-case basis. As the issue arises, then you consult with the higher up. And you don't know how open-minded or not that higher up is going to be on that specific issue.
Well, I mean, I would think whatever the decision is, it should go across the board. Things wouldn't change on whether you're putting in or making an adjustment for inventory on a case-by-case basis. Same rule would apply, like the 10
I would
Commandments.
say that my understanding of Ian's policy in general is that we do not adjust cost of goods sold and inventory.
Okay, that's all I need to know.
Yep. But on a fairly regular basis, something that Ian has told me for 20 years turns out to have changed last Tuesday. So,
Well, then he just needs to update whenever it is.
Yeah, exactly.
All right.
All right. Anybody else? Any other questions, comments? All right, if there's nothing further, thank you very much. And I'll have the test to you on Monday, and and I'll look forward to seeing all of you in training next week. Thank you very much. And Charlene, as always, thank you for all of your help.
No, thank you, Jeff. Appreciate you. Enjoy your weekend. Try to.
I'm going to. My daughter is flying out from New York.
Oh, you're kidding.
Time with us, so I'm very excited.
Well, I'm glad she finally decided to join you guys.
Yes. Yep.
Well,
Okay.
enjoy your weekend, and everyone else, you guys have a good one.
Thank you. You too. Take care now.
Bye.
Bye.